starts in 5 minutes. Find Winning at Life basically everywhere. You can find us on Facebook, Twitter, YouTube, iHeartRadio, Spotify, Periscope, Twitch, Dailymotion, DLive, Smashcast, Stitcher, Apple Podcasts, Google Podcasts, CastBox, Castro, Podomatic, Overcast. Did I say Spotify? I think I said Spotify. Anyway, we're everywhere. We prefer you listen on the Winning at Life app, and you can use that app to find us on your preferred platform. Stand by, the show's starting soon. Winning at Life with Gregory Ricks starts in 4 minutes. If you're interested in learning more about money and the financial world, have you checked out the Ask Gregory podcast? The Ask Gregory podcast has financial topics covering everything from how to handle your 401k to Social Security rules to student loans to precious metals. It's all the best segments that we've done on Winning at Life, and we condense down into specific topics by episode. So if you want to know more about money and investing and retirement, that's a great place to start. Find the Ask Gregory podcast on the Winning at Life app, iHeartRadio, Spotify, podcast app on your phone, and about 1,000 other places. I mean, don't go do it right now because the show's about to start, so just sit tight. Winning at Life with Gregory Ricks starts in 3 minutes. Hey, I'm your co-host, James Parker. You can find contact info to some of our show partners, including the Total Wealth Authority, on the Winning at Life app. If you're looking for a financial advisor, start your search with Gregory Ricks and Associates. If you have a mortgage issue, try Dwayne Stein at Mortgage Gumbo. If you have tax issues, try Jude Heath, CPA. And if you have some estate planning questions, try Wes Blanchard. These are all members of the Total Wealth Authority. You hear them on the show on a regular basis, and they're all linked on the Winning at Life app. Winning at Life with Gregory Ricks is starting in 2 minutes. You can listen to previous shows on demand with the Winning at Life app, the iHeartRadio app, Spotify, whatever. It's just the Winning at Life podcast. Now, that's different than the Ask Gregory podcast. The Ask Gregory podcast is episodes sorted by topic. If you just want to hear recent shows on demand, like yesterday's show or the show from Saturday, that's the Winning at Life podcast. It's available everywhere as well. The Winning at Life app, iHeartRadio app, Spotify, Apple Podcasts, Google Podcasts, the whole drill. Hey, why aren't you already following Winning at Life on all of our social media platforms? You can find us on Facebook, Twitter, YouTube, iHeartRadio, Spotify, Periscope, Twitch, Dailymotion, DLive. All these places are linked directly on the Winning at Life app. So download the Winning at Life app, whatever platform you prefer. Find us there. We'll come to you. Stand by. Winning at Life with Gregory Ricks is going to start in just a moment. Winning at Life with Gregory Ricks starts in 1 minute. Have you downloaded the Winning at Life app? You can listen to the show live. You can also watch the video version of the show live, or you can listen or watch to recent shows of Winning at Life on demand. There's no cost to you. It's in your app store, the Winning at Life app. Welcome to Winning at Life with Gregory Ricks. I'm your co-host, James Parker. Thanks for hanging out with us today. Stand by. The show is about to begin.
Hey, y'all. You're listening to Winning at Life. Yeah, the live. This is the live financial news talk radio show of the Southeast. I'm your host, Gregory Rex. Welcome to the show. We're glad to be back on. A few minutes, I'll bring you up to date on what's been going on the past 6 weeks with us. I know we've had people asking questions about all of a sudden a lot of best stuffs. We'll explain what has gone on. But this morning, it's live. So the purpose for newbies coming onto the show, we've been doing this for over 11 years now. And purpose of this show is to help you make better financial decisions. We'll talk about, current news events related to decision making is part of that. We're not so much about, what the stock market do this week, last month, last year. But I'll tell you this one simple fact: if you're following it and looking at it every day, 50% of the time it's going to be down if you're checking it every day. And I from time to time, I do cover these historical numbers with you. And conversely, it's up 50% of the time. And if you check it monthly, just monthly, it dramatically, the percentage goes up because it historically, essentially, it's up over 80% of the time when you look at long time periods. So what we want to help you do is make decisions going forward, to not panic during down periods. And I'll talk to you about the Invest 50/50 philosophy today that helps you with adjustments. But one of the things that impacts people worst is not the growth phase. Well, growth of the market is going to be in your favor long term. In the short term, yeah, it's going to work against you from time to time. And if you're only taking a short-term view, it's problematic. And not that there's anything wrong with it, but there's things you can do to tweak and reduce that exposure, because some people just have, less tolerance for risk. Even though 10 people before you jumped off that bridge with that bungee cord and they said it was awesome, I'm not going to be number 11. I'll tell you that. I'm not down for that. I'm not down for going up in balloon rides either. Oh, they're fine. Yeah, but something bad happens occasionally, and it's way too often for me to want to become a statistic on that. Okay, so you see, we're talking about the market where people are adverse to big market moves that come time to time, and they'll make bad decisions. So part of the show is to help you with that and strategies to help that work in your favor. So that's some of the things we've talked about on the show the past 11 years, and we go forward. And kind of the theme now, if you've been listening to the news, I know everybody doesn't follow it. And some are, well, Gregory, I get it here. Okay. Well, they're talking about raising taxes significantly. And if you think, well, I'm not wealthy, I'm not a high income earner, it's not going to impact me. Okay. Be careful with that, because it's going to impact you too. And we've talked about this in the past on the show, what they consider wealthy, and it's probably you. Think about it that way. So we're part of the theme is tax efficiency going forward, making better decisions. So to join the conversation, it's a live radio show. We take calls, and that's what probably, I think, the biggest impact of what we do for new people tuning in this morning is the calls that come in. So here's a phone number to join the conversation. We can talk about retirement, investing, type of investments. Hey, if you got a stock question, We'll address it. The 401k, Social Security over the 11 years has been the number one topic of the show. I have some thoughts for you on that today as well. And when you say, well, that's a lot. Well, we're on for 3 hours. So if you have to get away and come back in, you can. You can pick up the replay of the show later. We're over on Facebook Live. You can go over there and watch the show right now. James Parker's here with me. And you can download and listen to audio as well. Is that down? When does that go up, James?
For this show, it will be up Monday morning.
Yeah, so that's kind of a little bit of delay because that's a lot of material to get up, but we get that up. But the live show replays right after.
Instantly. On Facebook Live or YouTube or any of those channels.
So you don't know, just because you're playing it doesn't mean you have to watch it. So you could still play it on the replay as well. The Winning at Life app helps connect you to the show also. You can text, email, call the show, become a part of the Winning at Life Nation. We do email updates to you every week on what's going on as well. For newbies, my day job, I'm CEO, founder of Gregory, Ricks & Associates, the Total Wealth Authority. It's a financial advisory firm and money manager and financial Sherpas. We guide people through this maze of money decisions to help them reach their financial destination. That's kind of a loose description of financial planning right there. But if you want to call, join the show, 504-2600-995. And we talked about, and we've got a weeknight show that we do at 7 every evening, and that's an hour show, not a 3-hour show. So we do an hour show on weeknights. And I covered this earlier this week, but we've had a lot of requests and emails, calls to the office, like, what's going on with the show? There's been a lot of best ofs run lately. So I'm going to take you back in time. I guess now it's 5 weeks back, 6 weeks, somewhere. I'm not giving you exact timestamps, but, and I got approval from this, James. I still have your approval?
Oh, absolutely.
Okay.
Yeah.
So what happened, and you got this COVID-19 going around. And one thing about the show we've done for 11 years, James and I run hard with this. We've rarely taken breaks from the show. That is just a rare thing until this year, where we've started taking some breaks. But that's what people have gotten used to, is we're just like always on during COVID, the lockdowns and everything. One thing they knew, we were on the air every day. So about 6 weeks ago, James came down with COVID. So that would be me doing the show by myself. And after a few days, I said, okay, let's look at, can we get up and running? What's necessary for that? And then something else as a problem popped up. We had technical problems. Part of where we broadcast these stations to send the signal out from the studio that's at my home, we use these bricks, and something went wrong, and it might have been a power out, and stuff just kind of got juggled there. I'll use a good technical term for you right here: conjumbled. Yeah, I invented that. Not really. I stole it from somebody else. But stuff got conjumbled, and it wasn't working, and that knocked us out. And it took better than a week to get that back working, and it's not flawless on one of the bricks. We're going to have to replace one of the bricks because there's this thing called static IP. So we lock in the IP address so that it doesn't change, because when you're connecting to other systems, one thing, and you may not know about this, but I've learned even more about it lately because of what happened with Ida and affecting our headquarters internet, is systems like knowing that it's the same connection happening. And IP just basically says, yeah, we know who that is that's connecting. So stuff syncs up well that way. And so there went a couple weeks right there that of operational because of COVID, James having COVID, technical problems. By the way, I did not get COVID, even though we are probably 4 or 5 feet apart in the studio here daily. I did not get COVID. I'm vaccinated up. I'm a proponent of first and second shot, and I'm a proponent of the booster, but FDA said that's not necessary unless you're 65 and older and have health problems. Well, that's not me either. So with that said, I also had a vacation plan months out that came up next, and I went to Hawaii for a week and a half, which was good timing to do that because after we got back home, Hawaii said, do not come to Hawaii for a while. Things are rough over here. You know, the COVID and all is acting up. So came back, we did the show for a week, and then guess what happened? Ida impacted the show, and we were wanting to continue, but we were preempted because, you know, the storm wreaked a lot of havoc. So that kind of brings us up to speed to now. And with that said, we've run hard for 11 years, and also going back a few months, and there might have been the weekend before that, before this came up, might have also fell into where I took a long weekend off as well. So I've started doing that a little bit where we have planned best ofs to run here and there. And that's because I, you know, like you, would like to take a weekend off. I work at my day job, CEO of Gregory, Ricks and Associates, the Total Wealth Authority. And we do an hour show every evening at 7. It takes prep time to prepare for a financial show. And Saturdays, we do this 3-hour show. So I roll 6 days a week. And after 11 years, I've decided, you know, I'd like a weekend off here and there. I'd like a couple weeknights free because I'd like to have an evening like you have. So when we come together, that's what has happened over the past 6 weeks and why you felt there was an absence. We're fine. We're here, and we're going to be here for quite a while. We ultimately don't control how long we're on the air, but we've done this a long time, and Gregory, Ricks and Associates, the Total Wealth Authority, is doing fine as well. We're back operational, and we're happy to be here with you and take your calls today.
I'm James Parker. We're Winning at Life with Gregory Ricks. Ask Gregory is a financial podcast from the guys who bring you Winning at Life with Gregory Ricks.
My mother just inherited a couple of annuities. If you could explain the difference between a government pension offset and the windfall elimination provision is.
You now make too much income to contribute to a Roth IRA.
Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcasts, Apple Podcasts, and Spotify.
You all are so good.
Investment advisory services offered through AE Wealth Management, LLC.
Mortgage Gumbo with your chef, Dwayne Stein.
I would never hesitate to ever call them for anything else that we need.
And I can't say enough good things about Dwayne Stein and his people at Mortgage Gumbo.
I will never, ever do anything as far as a mortgage is concerned without contacting Dwayne Stein and his group. Again, first.
Mortgage Gumbo with Dwayne Stein. 2 servings every Saturday, 9 a.m. and 1 p.m. on News Talk 99.5 WRNO.
If you like money, you'll love the Winning at Life app. On the Winning at Life app, you can hear the Ask Gregory podcast, where you'll find episodes based on a financial topic. So if you're looking for help on a specific situation, there's a good chance you'll find it on the Ask Gregory podcast, including episodes on 401ks, taxes, stocks, Social Security, gold, and whether or not you should buy an RV. Hear the Ask Gregory podcast on the Winning at Life app, your wallet's favorite app.
Half of estate planning is having a plan put together for your loved ones when you pass away. The other half of estate planning is dealing with someone else's plan when they pass away. Sometimes they have a great plan, but sometimes you need a little help. Don't leave your loved ones in a bind. Call me, and we'll make sure you have a plan. Hi, I'm Wes Blanchard, an estate planning attorney in Metairie. What's your plan? Find me at wjblanchardlaw.com.
The Ricks Report with Gregory Ricks.
What we found through history, looking at the past 90 years, most fund managers don't outperform or perform as well as the indexes. Using indexing, historicals teach us skew a higher return. And yes, there's bad stocks in the S&P 500 as it looks right now, and yet the index is up. I like to use indexed ETFs because those are much lower expense ratios. We try our best in managing our portfolios to avoid trading costs, and we know I've been doing this for 30 years. I've studied trading strategies. You're not going to outsmart the indexes. You may get lucky, you may get unlucky.
Winning at Life with Gregory Ricks. Find us on the Winning at Life app or winningatlife.com. Investment advisory services offered through AE Wealth Management, LLC. Investing involves risk, including the potential loss of principal.
I believe most people are good and most mamas ought to qualify for sainthood. I believe most Friday nights look better under neon or stadium lights.
Hey, y'all. So we're going to talk about some tax stuff. I've got the rule of 55 exception and a couple of Social Security thoughts for you today. Hour two, we have Dwayne Stein. He has his own show, which you could catch on, I can say this on this hour because of the affiliates. You can catch him on iHeartRadio out the New Orleans region. His show comes on before ours, and there's a show after our 3-hour show, and he's been a long-time contributor. He's coming up in hour two, and it's always a blast to have Dwayne Stein on the show. He brings a unique perspective to interest rates, mortgages, and so forth. House Democrats propose top 39.6% tax rate. So the Dems have proposed a top marginal income tax rate of 39.6% for individuals as part of a sweeping change to the tax code to fund climate investments and expansion of the U.S. safety net. So that's what they're calling it, a safety net. And climate, I won't go into opinion right here because I need to cover the rest of this. That rate, an increase from the current 37% levy for the wealthiest taxpayers, would kick in for single individuals with a taxable income over 500. I'm sorry, I was going to say 500, but it's 400,000, according to a legislative outline issued by the House Ways and Means Committee yesterday. It would also apply to married individuals filing a joint tax returns whose taxable income exceeds $450,000, to heads of household over $425,000, to married individuals filing separate returns over $225,000. Ouch! And to estates and trusts over $12,500. Yeah, you get that. Estates and trusts, they just get taxed at the max tax bracket. It's not a progressive deal for them in that case. Lost order of some of my notes there for that, but let's jump over to some of the other problems we have going there. But that's that's really stiff from these top tax brackets going up, and they're not waiting till 2026. They're trying to knock that Trump tax breaks out right now. Now, also, they proposed retirement plan rules for the rich, new retirement plan rules for the rich, including contribution limits and a repeal of Roth conversions. We talked about this last night, but the House also proposed a slew of changes to retirement accounts for the rich yesterday, part of a restructuring of the tax code. And, I think they're trying to raise like $3.5 trillion or spend that much of our money. Taken together, Dems reforms aim to erode the use of retirement accounts as a perceived tax shelter for wealthy instead of promote them as a way for low and middle income Americans to build a nest egg.
But if it's a tax shelter for low and middle income, why wouldn't rich people be able to take advantage of it too? Like, how can you even word that?
Okay, well, we're going to probably tomorrow, we're going to come back around and define what's low and middle income and upper income. And they're saying middle income, and then everybody else is wealthy. So you don't need to save money. And I have a problem. And one of the reasons I'll mention to that in just a moment, but wealthy individuals with retirement accounts exceeding 10 million would be prohibited from contributing extra savings and would have a new required minimum distribution each year, according to an outline of the legislation that was revealed yesterday. The bill would also repeal so-called Roth conversions in individual retirement accounts and 401k type plans for those making more than $400,000 a year, or couples making more than $450,000. It also would prevent savers from using the mega backdoor Roth strategy regardless of income level. And I don't think that's the right thing, because the rules have been forever to allow you to put much more into your 401ks. And they're like, oh, you can't do that. Well, you know what? And I'll tell you right here, right now, the biggest problem we have is people don't save money. So you've got basically low and middle class are higher proportionate that they don't save. We need more incentives to save, not taking stuff away from us. And some of this needs to be from a catch-up standpoint, where later in life you're making more and you can put more away. Why? Because you've bought that house, maybe even paid it off. You've got the kids grown. They're through college. You know, now you've freed up some money to save, and you're probably needing to catch up, and they're taking that away from you. So legislation would prohibit individual retirement accounts from holding investments that require buyers to be accredited investors. I don't have a problem with that, because when they say you have to be an accredited investor, that's probably too much risk for most people. Why is accredited investors? Well, basically it's somebody with $1 million plus, meaning, yeah, if they're accredited, they can afford to lose some money. The proposals are a broader part of the theme of raising taxes on those who earn more than $400,000 a year. Democrats, basically what stirred this is ProPublica. It was really convenient that somebody from the Treasury leaked tax returns of the wealthy. So they started publishing this stuff, and they talked about Peter Thiel, a PayPal co-founder, owns a Roth IRA that had grown to $5 billion in 2019, up from less than $2,000 in 1999. Well, you know what happened? He put some very low price, it's kind of like penny stocks into that Roth account, did a conversion of that and placed that in there. And next thing you know, the company has a ridiculous price per share. And yeah, he made a lot of money. So this fluke, this got lucky, creates where, we have to change the whole system. IRAs were designed to provide, and in this article here is defining, and this is from CNBC, IRAs were designed to provide retirement security to middle-class families, not allow super wealthy to avoid paying tax. Senator Ron Wyden, chair of the Senate Finance Committee. No, they're designed for everybody to put away money, and sometimes, some people really hit it big, but that is not the norm, that we have people running around with billions in Roth accounts.
Yeah, so it sounds like a general repeal of the Trump tax cuts with a few other tweaks and twists in there, and so far I'm not liking most of this.
I'm not liking any of it, because what the parts I'm disliking, look, if you feel you need to make a couple percent more on the higher income people, fine, whatever. But one of the things, and we talked about this a few weeks back, I'm going to have to pull up my numbers on this, but, we've got because of COVID now, we've got 57% of the population on 2021 taxes are going to end up not paying any taxes. It's tremendous. Generally, that number's around 42% historically, I believe, that don't participate in the tax system. And, if you kind of put some math to the taxpayers out there, if they all paid something, and I don't think that's fair either, because there's a portion that shouldn't because of their income so low. But gosh, we've got too many people opting out of the tax system. And I'm not saying a minimum tax or anything, and we're talking about individuals, not corporations there. And it's just, gosh, it seems like there's probably too many people not paying anything. So that would help tremendously if we had more paying taxes. But that top 20, that top 30%, at some point, you're going to have to figure something else out, because you can't be taxing to death those that are actually running our economy with spending, hiring, investing, and jobs. You finally take away from them, then you cause this whole thing to shut down. We are not socialist. We're free market capitalists there. So that's my thought from a tax standpoint. So yeah, and start squashing because of Peter Thiel doing something that turned out to be huge for him. That is not the norm. That's not to go and revamp the whole system. In my younger days, I like George's daughter that called in, I didn't have the opportunity or that kind of money early in my life and career to make money to save. I'm like a lot of you, I'm more on the back end. I've been working on catch up for years and years, but I didn't start investing and saving when I was in my early 20s. So I can relate to, hey, we need to be allowed to put more away in later years. And, they technically probably, Washington would probably call me wealthy, but I sure as heck don't feel like it at all. And yeah, I think I need to save more.
All right, some inside info here. We just recorded some great commercials this week for the next round of live events that are happening in October. These are the Wine, Wisdom, and Food Experience events. And so if we haven't run commercials, that means the only people that know about it is myself and Gregory and his team, and now listeners to this show. You're getting some ahead of time information, so you can go ahead and get your reservation in before we start advertising it across different radio stations. And then the line fills up, and then there's a waiting list, and then you miss your spot. This is your reward for listening and being a good person on a Saturday morning. You could be goofing off, and here you are trying to learn more about money. The events are going to be October 13th in Madisonville at Keith Young Steakhouse. There's two set for Baton Rouge at Sullivan Steakhouse, October 26th and October 28th. That's a Tuesday and a Thursday. So October 13th in Madisonville, October 26th and 28th in Baton Rouge. Sign up at GregoryRicks.com. There's an events tab at the top. Go fill it out or call the office directly, 504-832-9200. I'm James Parker. We're Winning at Life with Gregory Ricks. Hey, James Parker here from Winning at Life. Something that's come up on the show over the last 10 years is that if you're not at your old job, maybe your 401k shouldn't be either. But do you really know why we say that? It's a funny thing. We put a few $100 in our 401k every month. It ends up to be thousands of dollars every year, hundreds of thousands of dollars over our career, and you don't really know that much about it. How do you invest it? How do you diversify? What do you buy? What do you avoid? If you've got a financial situation and you're not quite sure what to do, ask Gregory. Ask Gregory is our new podcast with these financial topics broken down into specific little chunks. So if you have a financial situation or you just want to learn more about money, ask Gregory. Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcasts, Apple Podcasts, and Spotify.
And I want to thank you for all of your help.
That's exactly what I needed to know.
Investment advisory services offered through AE Wealth Management, LLC.
2 questions. Do you have a pulse? Do you own anything? If you said yes to both, you probably need a will. You may even need a trust. We all know a lawyer. Do you know someone who specializes in estate planning? Do you really trust the husband of your sister's friend from college? Or would you feel better putting your family in the hands of the estate planning attorney of the Total Wealth Authority? I'm Wes Blanchard. What's your plan? Offices in Metairie and at wjblanchardlaw.com.
Most people think of Crime Stoppers as only a tip reporting line, but we're so much more. Crime Stoppers GNO has worked in our area schools, offering prevention presentations on trending topics from drugs, bullying, online safety, suicide prevention, and much more. And we have a high school teen leadership program which provides students with a first-hand look at the criminal justice profession as a future career, while learning to be an advocate for their fellow students. So to learn more, visit safeschoolsla.com or call 504-837-8477.
If you like money, you'll love the Winning at Life app. On the Winning at Life app, you can listen to the show live 6 days a week. And if we're not on at the moment, you can hear a replay of the latest episode of Winning at Life. Whether you're getting a late start on your retirement savings or keeping up with the financial news, Winning at Life with Gregory Ricks is there on demand. Hear the Winning at Life show on the Winning at Life app, your wallet's favorite app.
Fox News, I'm Karen McHugh. The president says new taxes anticipated under the budget reconciliation bill will not affect most Americans.
President Biden's top legislative priorities all hinge on massive new spending. So in order to do that, taxes are going to have to go up. But we know who's going to have to pay more under the plan that Democrats are proposing. We are going to see that corporate tax rate go up just a little bit from what we've seen previously. We also know that the tax cuts for wealthier Americans, they're going to be rolled back. Those are the ones passed under the Trump era. Top individual tax rates are going to go up to 39.6% from the 37% they were now.
Fox's Mark Meredith. Republicans say all this will just put Americans deeper into debt. U.S. Capitol Police taking no chances as they call in help from neighboring departments and the National Guard ahead of today's rally in support of those locked up since the January 6th riots. That rally expected to begin soon. America is listening to Fox News.
Winning at Life with Gregory Ricks is a copyright of Down South Strategies for the private use of our audience. Any unauthorized use of this broadcast without express consent is prohibited. For podcasts, show information, and contacts to our sponsors, go to winningatlife.com or download the Winning at Life app. If you've got a financial situation and you're not quite sure what to do, you better call Gregory. We are Winning at Life with Gregory Ricks.
I got my shades on, top back, rolling with the music jack. One on the wheel, one around you, baby. Sunset, I bet there's a chance we could get sure enough tangled up, laid back and lazy. Pour it on easy now, don't spill a bit. Nothing but time tonight. Let's get to killing it. Long as I'm
Hey, how you doing? This is Winning at Life with Gregory Ricks. It's the Money Show. I'm your co-host, James Parker. If you got a financial situation, not quite sure what to do, this is the show that has been answering your questions for 11 years, and we'd love to keep that going by helping you with your situation right now. 504-260-0995. 504-260-0995.
One of the rules that we've talked about from time to time is the age 55 exception is how I define it. And Brian Beers of Bankrate, I got an article that we're going to put up on blog over at gregoryricks.com, talks about retiring early. And that's one of the problems where our caller talked about having money in 401k, but he's trying to shoot for retiring, say, at age 40. I don't know that he gave an age, but that movement is people wanting to retire in their 30s, early 40s is kind of the goal of that. But one of the problems, if you've got a lot of money in qualified plans, taking a distribution from a tax qualified retirement plan like a 401k prior to age 59 and a half is subject to a 10% early withdrawal tax penalty. But the IRS has a rule of 55 that may allow you to receive a distribution after attaining age 55 before, once again, you're 55 before you're 59 and a half. But you can take distributions from the plan if they allow it after you've turned age 55. But separation has to be the year in which you're turning age 55. You can't be terminated or leave them at 53 and say, okay, I'm going to leave the money there. I'm going to take it when I'm 55. No, the rule doesn't work that way. But at 55, you turn 55 and separate in that year, you can take distributions from that 401k without triggering the early penalty. And then once again, that's if the plan allows it. 401k and 403b plans are not required to, and this is interesting here, this is the IRS rule, but the plans are not required to provide for the Rule of 55 withdrawals. So don't be surprised if your plan does not allow this. So this is something, if you're thinking of doing it, you need to speak with the administrators of your company plan and make sure. See, the following statements apply to your situation and retirement plan, then the Rule of 55 may be a good option for you, but you need to check with your HR department or call the plan administrator of your 401k, 403b, and see if they do those types of distributions there. So the rules vary, and they've got some range of how they can set those up. But once again, these examples might be a good option for you. Your company plan offers a 401k or 403b, 403a, or B that allows the Rule of 55 withdrawals. Some plans prohibit withdrawals prior to age 59 and a half, or even 62. We've had callers call in the show and talk about that. They can't access their money before age 62. If you leave a position voluntarily or involuntarily in or after the year you turn 55 years old. That's what I mentioned earlier. If you've left before the year in which you turn 55, this isn't going to help you. Number 3, you're a qualified public safety worker, police officer, firefighter, EMT, correctional officer, air traffic controller with a qualified plan that allows withdrawals in or after the year you turn age 50 years old. So we've got the age 50 exception for those workers. Once again, those are a police officer, firefighter, EMT, correctional officer, or air traffic controllers. Number 4, you understand that taking early withdrawal means forfeiting any gains that you might otherwise have earned on your investments. You're starting to hit your account early, so you need to make sure it's going to, your plan long-term is going to withstand starting distributions at age in your 50s, in that case, depending are you a correctional officer or not, or at age 55. You fully understand that your funds must be kept in the employer's plan. You cannot roll this over to an IRA and have the age 55 exception. It has to remain in the employer's plan. And number 6, you can wait until the start of the next calendar year to begin the Rule of 55 withdrawals when your taxable income should be lower if you're not working. However, as with any financial decision, please check with a trusted advisor or tax professional to avoid any unforeseen consequences. Now, the last part of this I'll give you is the following statements apply to your situation, then the Rule of 55 is probably not right for you. Number 1, the amount of your income for the year in which you begin the withdrawal plus the early withdrawal will put you into a higher marginal tax bracket. Number 2, your plan requires a one-time lump sum withdrawal, which may force you to take more money than you want and subject to ordinary income tax liability. These funds would no longer be available as a source of tax-advantaged retirement income. They may let you take it, but here's what some plans do. Some plans tell you will limit you on distributions. They might not, and I've seen these situations, they might come in and say, you can't take monthly. You can only take a distribution. You can't change it. Or if you take another, you've got to move all the funds out. So you've got to understand the rules, and understanding if you're wanting to do this strategy, the age 55 exception, that your plan needs to be able to kick money to you monthly and not get bent if you're needing to change or adjust or might even stop that. And number 3, you want to leave your current employer before a year in which you turn 55 and start taking withdrawals at age 55. Note, this is not allowed, and you will be assessed a 10% early withdrawal penalty. And there's other important considerations as well. And if you want some help with this, I've got a pretty darn good team you can call, whether you're in Baton Rouge, Louisiana, Gulfport, Mississippi, Mandeville, Louisiana, Metairie, Louisiana, and you need some help, or rest of you listening around the country, we can do a 15-minute phone call. We can do those Zoom meetings, One number to call, 504-832-9200. We can help walk you through these 401k, 403b, early retirement decisions. And go check us out at GregoryRicks.com. Okay. Once again, this is part of thinking about how you order your distributions, and the age 55 exception is an important part of that, of streaming money. Sometimes folks will focus on taking after-tax money, and if you're doing that and creating a situation where you're in low taxes, and say, well, I don't want to take my qualified money. Well, in that sense, you probably should be taking it. Well, I don't need that much money. Yeah, I understand you don't need that much money, but what we're needing to do is take advantage of low tax brackets where you can shift money elsewhere for use in the future. And that's where maybe you've got a break, say, hey, I'm fine. I'm not needing money for 2 years. I'm not really going to have any taxable income. Once again, probably where you should turn on and take advantage of that age 55 exception. Or if you're beyond that and not wanting to take the IRA money, the 401k money, but maybe you should, because you've got this thing that starts at age 72 called required minimum distributions. And those are going to ramp up and force you to take more money and force you into higher tax brackets. So we have to think of the order in which we're taking money. And the other part of that is do not waste your margin. And I'm referring to the room between where you are income and the next level of tax increase, because it's bracketed. We have a progressive tax system. The more you make, the more taxes are paid on the next level of income. And so you have to think about that as well, to where you're doing a Roth conversion or just simply shifting money and paying lower taxes on it now for use later in the future. We can move it and put it to work somewhere else, but we have to think about how income looks forward quite a while. Retirement is going to be a long time. For some of you, you're going to draw on the money longer than it took you to build it up. And you have to think about it that way. Two important things. When are you retiring? What year is that? And that gives us the age at retirement. And say that date puts you at age 65. There's another number you have to come up with. No, it's not the FRA. You still probably should wait the FRA to turn on Social Security. The other number is, how long are you going to live? No, we don't know for sure, but we sure need to estimate it out, because that's how much long you're going to lean on assets, and you don't want to run out of money.
504-260-0995. I'm James Parker. We are Winning at Life with Gregory Ricks.
If you've got a financial situation and you're not quite sure what to do, you better call Gregory.
Because of our style of money management, we will start dialing things back when the market's headed the wrong way. You know, like lower lows, lower highs is not a good thing as far as the trend.
Gregory Ricks and Associates, 504-832-9200 or GregoryRicks.com. Investing involves risk, including the potential loss of principal. Investment advisory services offered through AE Wealth Management, LLC.
Mom, it stinks.
Hush, I'm almost done. All right, now you're safe from bugs in the backyard. Don't let mosquitoes ruin your outdoor fun. Call Mosquito Joe today. When you call, they come out and they do the spraying. Mosquito Joe's time-release capsule lasts for about a month. No more sticky bug sprays. Take back your backyard. NewOrleans.mosquitojoe.com. NewOrleans.mosquitojoe.com.
If you've got a financial situation and you're not quite sure what to do, you better call Gregory.
Most of what I hear when families come in and they're moving from one of the big banks that has a big brokerage firm, and what they feel is they're more like a number there, and that they're not getting that personal service or that communication. And that's one of the things that's really important to me, is that we provide that communication, we provide that service. But I'll tell you what, we're bigger than the average firm as that goes. And when you talk about who you're working with, the advisor, well, do they have a 12-person support staff? Do they have advisors working for them as well to make sure all of this happens?
Gregory Ricks and Associates. Find us at gregoryricks.com or call 504-832-9200. Investment advisory services offered through AE Wealth Management, LLC. The Ricks Report with Gregory Ricks.
So part of our invest 50-50 money management philosophy is to use stock ETFs. We like the indices. We're not going to beat them, so let's join them. Somebody will say, well, what's your track record? Well, what's the track record of the S&P 500? Because that's what we're using, the Dow, the NASDAQ, and some of the sub-indices there. Well, what are you doing on bonds? Well, we like those on the ETFs because I'm not in the buying houses and selling houses business. You know what the pain it is to sell a house? Well, that's kind of like selling a bond. You got to list it and wait for bids. I'd rather do it inside of an ETF that has low expense ratio and let the institutional guys help with that selection.
Winning at Life with Gregory Ricks. Find us on the Winning at Life app or winningatlife.com. Investment advisory services offered through AE Wealth Management, LLC. Investing involves risk, including the potential loss of principal.
But you gotta keep your head up, oh, and you can let your head down, hey. You gotta keep your head up, oh.
Hey, y'all. You're listening to Winning at Life Radio. I'm your host, Gregory Ricks. We've been bringing this to you for 11 years, and thanks for joining us today while you're going about your Saturday chores or recovering from that 5-day work week you just had. Or for a lot of people in Southeast Louisiana, they're still doing chores on recovery from Hurricane Ida, and then the relentless rain that is followed behind that since. One thing that was interesting about Katrina is we had several months of no rain after that storm, so that was pretty needed break because of all the blue roofs out there. Hey, one thing I want to mention, and we're doing some what I call pop-up events for clients that we're planning to do going forward. And part of that is the guided planning system, which is a resource we have for clients to access account information, have a digital vault. It's an account where they can log in and see everything that they have, what's going on, performance information, analysis, reporting, and then on their view, they can put in accounts they hold elsewhere. Could be their banking, their credit card, or even if they have another brokerage account, and they get all that view on their side. And what's cool about that is you can view that anytime, any place, even from your smartphone. You can be on vacation in Italy next year when all that opens back up, assuming it will. And with that said, look, if we can't make this COVID thing completely go away, we're going to adapt to living with it. And that's kind of where we're at right now, is adapting to living with it. So we're going to see some normalcy come back because we may very well have to live with this thing from now on. So when you're traveling and need to check on your accounts or shift some money or do something, you've got that resource that's easily accessible. So where I'm getting at, and we've used this for a number of years now, and we are fixing to even upgrade that account, that GPS system, to where it is going to be easier to use and give you more resources. And we're going to be talking about that in our pop-up events. And another thing we're talking about is tax efficiency. We're adding some tax efficient models to the mix, looking at adding basically muni bond strategies to bring you tax-free income. So we are expanding our models to where that, and it has to be an emphasis in this environment of being taxed. Can, part of like having a Roth, taking some money off the grid, the ordering of how you take income, and from an investment standpoint on non-qualified assets, can we create some efficiency? So that's something we're adding to the mix as well. And the other side of what we're going to talk about in the pop-up events, and this is tactical investing. And I from time to time, you hear about my trademark philosophy, the invest 50-50 philosophy, which we use essentially, I define as 4 asset classes. That's using ETFs for the indices, the NASDAQ, the Dow, the S&P 500, and some others. I'm not excluding others, but and subsets of those, and strategies to get market growth super efficiently from a pricing standpoint. And those of you that are doing it from a stock picking standpoint, gosh, did you know that most stocks do not outperform 30-day treasuries historically? So that's problematic for even the pros, and the pros rarely beat the index. And, that they're typically judged by how'd you perform against the S&P 500? And you're doing it yourself. How's that going for you? Are you beating it? No. So I always have this philosophy: if you can't beat them, join them. Okay, we're not going to outperform, but that gives us access. Instead of you going and buying 500 different stocks yourself, or whoever you're working with is doing stock picking, trying to do that, it's very inefficient how you're going about it. So I like using exchange traded funds and capturing the indices there with a part of our money. But I also like bonds as a strategy as well. And I would rather do bonds through ETFs, exchange traded funds, because it's much more efficient on the handling of that versus buying individual. And that's where we're adding munis to those strategies as well. The third asset class would be tactical investing, and that's where a portion of the money is going to react to what's going on. And then it's also going to shift to where momentum is. So it means it's going to be more actively traded, but once again, we're using ETFs for the most part to do that. We're not doing individual stock buying. We're going to be efficient, and tactical means when money needs to move, it's going to move, and it's going to follow where momentum is. It also is going to have a black swan effect, like last March, because of COVID and the lockdowns, when the market dropped dramatically, like 9/11, we talked about that recently and had memories and sharing with the kids what happened back when they were young, because they were unaware of this, and Netflix has a documentary now about. So we were kind of talking about that, but the market dramatically dropped. The market was actually closed for a few days. So when you have a black swan event, you shouldn't have all of your money impacted there. So we like tactical to be in the mix. And the fourth asset class is fixed indexed annuities. Why? I know some of you just swerved off the road. Straighten your car back up. Just hang on. Don't get back on your lawnmower. They might run over you. Fixed indexed annuities is an asset class. And look, there's a lot of annuities out there. There's those variable things out there. I dislike those. And I tell you, I don't like all annuities. But what I do like about the right ones is getting the upside of the indexes through a par rate and not having downside exposure. So when in a meeting with us in my day job over at Gregory Ricks and Associates, the Total Wealth Authority, we take you through these asset classes and look at the past 20 years where volatility has been impacting us most. and showing you how utilizing these 4 asset classes put you ahead of other strategies. And I'll rephrase that, because what our objective is to increase the probability of success. And when things are kind of getting off kilter out there, that happens time to time, we're increasing the probability of success. And the other phase that we talked to you about is how that looks from a growth phase. And one of the neat things really is when you go to the distribution phase, and that's where volatility will wreck your portfolio. It will accelerate your spend down. You know what you hear this phrase, and we'll talk more about this in the future, is sequence of returns. And you have to be aware of that. And we are going to face a day like we did about 20 years ago where the market had 3 down years in a row. You're like, when does that happen? It happens, and it's probably going to happen again. How's that going to impact your portfolio? And if you're taking income, that can be devastating. So that's why we take you through the growth phase. Then we show you if you were on a distribution phase the past 20 years, using those 4 asset classes correctly increase the probability of success. And that's why I want you to understand the importance of having that. And that's part of what we talk about on the show going forward, so that you understand there's opportunity to improve upon what you're doing. So we're going in our pop-up events, we're talking about, once again, upgrading the GPS that we have, the guided planning system website, the tax efficiency as well, which is added into the Invest 50/50, but that important part of that event is talking to you about getting tactical into your mix. And I look forward to talking to you more about that.
All right, coming up in the next hour, Dwayne Stein of Mortgage Gumbo has tips for homeowners after the storm. Going to talk about affordability and when are rates going up. If you have a question for Gregory or Dwayne, 504-260-0995. I'm James Parker. We're Winning at Life with Gregory Ricks.
Investment advisory services offered through AE Wealth Management, LLC. Winning at Life with Gregory Ricks is for informational purposes only and does not recommend the sale or purchase of any specific securities, investments, legal advice, or tax advice. Investing involves risk, including potential loss of principal. Roth conversion is a taxable event and may have several tax-related consequences. Be sure to consult with a qualified tax advisor before making any decisions regarding your IRA. The information and opinions contained herein are provided by third parties and have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed. Neither AE Wealth Management nor advisors providing investment advisory services through AE Wealth Management recommend or facilitate the buying or selling of cryptocurrencies. The firm is not affiliated with the U.S. government or any governmental agency. The firm offers insurance services. We are Winning at Life with Gregory Ricks.
From the Gregory Ricks and Associates Wealth Management Studios, WRNO FM, New Orleans, an iHeart radio station.
Hey there, good morning. How you doing? Happy Saturday. This is Winning at Life with Gregory Ricks. It's the Money Show. I'm your co-host, James Parker. If you got a financial situation, not quite sure what to do, you don't have to ruin your weekend driving around with this thing weighing on your mind, weighing you down, following you around like that little storm cloud that used to follow Ziggy around, remember in the old calendars and the old comic strip? You don't have to do that. You can get a little bit of, at least start the conversation and get a little guidance pointing in the right direction, if not an outright answer to your financial situation, by calling this show. Gregory Ricks, the guy across the table from me, is a financial advisor, been in the business for a few decades, been answering questions on the radio for you for over 11 years. And then joining us also in this hour is the great Dwayne Stein of Mortgage Gumbo. And he's been answering questions on our show for, I guess it's 7 years, 8 years. I don't know. When's the last time we did the math on that? But he has his own show, Mortgage Gumbo, which if you're on our flagship affiliate, you hear it before and after our show, but also on the Winning at Life app before and after our show. MortgageGumbo.com is his website, but if you're looking for his podcast, you can find it just about anywhere you do podcasts, Spotify, iHeartRadio, all that good stuff. So welcome back, Dwayne Stein.
Great to be back.
First thing that's on our minds going into this week is there's a Fed meeting. And the Federal Reserve Board of Directors is meeting, and Jerome Powell is going to give us the results of their decisions. And about 0 people, give or take 0, think that they're going to raise rates. And it seems like the focus of this meeting, everyone's ears is going to be perked on the word tapering. Not that they're going to necessarily start tapering. That's still pretty doubtful. It's possible, but not probable. But the fact on when they think the time horizon will be on tapering is probably the first thing people are listening for Jerome Powell's statement about halfway through this coming week.
Well, a couple things now. Keep in mind, when we talk about Jerome Powell and that is the federal funds rate. So just to kind of recap for the listeners, what that means is the federal funds rate deals with your short-term interest rates, okay? So mortgage rates don't always coincide with what Jerome Powell is going to say. However, in the times that we're in right now, what he's saying carries a lot of weight, water, whatever the saying is. And what we're looking at is, while I don't think they're going to raise that, he's going to, the second he says and puts a date on the tapering, James, yes, we are going to see, in my humble opinion, I think we're going to start to see rates going in a direction that, hey, we haven't seen for 18 months now, 19, 20, whatever it's been since last March, right? So, yeah, I mean, this week is a big, big week. And, I just told my audience I'm going to be listening in to kind of hear what's going on and what's being said there, because that word taper, which is, used to be known as quantitative easing, right, was the word there. When they start tapering, they're going to start backing off on that federal bond buying to the tunes of $100 and something billion a month. That's going to affect things all around. And that's going to be, that's where, James and listeners, that's where it's going to affect mortgage rates. Because then it becomes, the federal funds rate may not change, but if they start tapering that buying of the mortgage-backed securities, that's where we're going to see the effect come over to play in our world.
Dwayne, so where are we on 30-year mortgages right now?
I mean, hold yourself. I mean, this is crazy, but 3.03. Now,
wow,
that this week, yeah. So still fantastic, but the last time I said 3, just so you know, was listen to this. I mean, was the last time I said 3 was, I'm looking back here, was July 3rd. So over 2 months. And look, 3.06, oh my gosh, it's over. I can't afford housing anymore. We know that's what people are immediately going to think. And that doesn't mean you can't get rates in the 2s, but 3.03 is still a giveaway. But what we saw, and Greg, you know this, but we'll share it with the audience, what we saw when they rolled out the retail sales this week we saw 3 straight days of rates increasing. And they were, and the reason being is they wasn't expecting retail sales to go up. They were expecting it to be a loss of about 0.8%. Well, it's up 0.7%. So that swing there, man, as soon as that came out, Greg, it's crazy. It was like, boom, things started shooting up. Now, lucky for us, we've got a float policy, and we kind of, it's your 50-50 deal, right? The serve and protect, so to speak. We got you. We'll take care of those games. But if things start to go the wrong way, we're going to get you locked in, and that's what we're in right now. We're not in a floating position right now. We're in a locked position right now.
Well, my thoughts are kind of inflation.
Yes,
has kind of kept increasing at the rate on the latest report. Job numbers have gone the other direction. Mm-hmm. And they're not wanting to dial back this quantitative easing overall, this tapering part of it on that bond buying. They're really not wanting to do that at this point. So I still think the language is on what's coming is they're going to stay more in a wait and see area. And I don't think they can get to it until the back end of this year.
I agree with you. And my thing too, Gregory, is let's think about this. You want to think about everything that the housing market brings to the table, right? I mean, look at the appreciation. Look at the industry, right? Whether it's lumber, nails, chips, right? Everything is smart these days. Your refrigerator, your dishwasher, that guy that works down at the courthouse that posts when, you want to put in a new pool or you want to build on your lot. So, you talk about the one industry, so to speak, and look, I'll be the first one to tell you it's better to be lucky than good being in this industry right now, because last March thought the world was coming to an end. And now we've had all this. So you talk about, like you said, if they all of a sudden go, hey, here's what we're going to do, and this rate goes from, heaven forbid, 3.03 to even 3.5, Gregory. We've seen that, and we've talked about that on this show. People are going to shut down, even though it's amazing. And we're not here to talk about what it was like in the 70s and 80s, right? But you start going to 3.5 or, heaven forbid, 3.75, it's going to slow things down, and this sieve is going to go to a trickle. And I think they know that, especially with this, I don't want to say this regime, so to speak. They like giving things away. Let's face it. So I don't know why they would stop giving away the low mortgage rates.
Yeah.
At least that's what I'm hoping.
And look, once again, we've got other problems coming. And I was having a conversation yesterday about this from the real estate market that, people not paying their rent and because they can't be evicted. And they don't really talk about this, but there's a segment of renters out there that are taking advantage of what's going on. Even though they're capable, they're not paying. And they're going to get put out. But on the other side of that, those owners of that real estate, of those rental houses and apartments, they have mortgages. They're not getting rent in. How are they paying the bills? People are going to be getting evicted because they're not going to be able to catch up on that back rent. But one of the things I was thinking about is when the foreclosures start coming, you're going to have some of these owners of these rental properties have lost those properties. And those new owners are going to evict the people that are not paying. We've got a lot of this that's coming down the pipe here, and you're going to see some reverberations through the systems out there.
And I do think I agree with you, Gregory. And I do think that's going to take, when you look at the forbearances where we were at, 5 million, and now we're down to, it's a small number. It's down to like 1.5 million still in forbearance, and I'm looking for it right now because I want to share it with you. The numbers on how it breaks down, right, of the forbearance. And I kind of disagree with some of the experts who are saying, well, it's not going to be an issue because, people have equity and all that. But what they're not taking into account right now is, through this report, almost 30-something% of these people in forbearance that they're saying, hey, they came out of it okay, or in some kind of loan modification or interest-only payment. So we could sit here and go, hey, only 6% are going to go bad. Or, if everything went bad right now with the forbearance and everybody lost, it would only be 2,400 homes, right? Which we don't want one, but 2,400 sounds like, oh, no big deal. But what they're not taking into consideration is the folks out there who took modifications, who took interest onlys, like you said, eventually down the road, the taxpayer or the landlord, the investor, the servicer, they're coming. And right now they're putting that under the everything's fantastic bucket, or putting it all in there. They're looping it in with the folks who paid in full and this and that, as opposed to, and I think that is something, when we start looking at it, that is something that we're going to have to pay attention to.
And overall on our society and manufacturing and production, anytime, and this is showing with the chips as an example of this, but this goes across so many other areas, because we've never really, it isn't like we have excess chip supply. And you go into whether it's furniture or foam, there's not this excess. Production builds up to what we need. Mm-hmm. And excess doesn't make you money, like, making chips that aren't being bought. So once we get behind, it really is difficult to catch up. Just to catch up, because you still have that demand that you're behind on that just keeps building. And that's part of our problems overall.
All right, we got the financial guru, Gregory Ricks, here. We got Mortgage Gumbo's Dwayne Stein. If you have a question for either, 504-260-0995. I'm James Parker, and we are Winning at Life with Gregory Ricks. Ask Gregory is a financial podcast from the guys who bring you Winning at Life with Gregory Ricks.
I'm your host, Gregory Ricks, a financial advisor here to answer your questions and help you win with your money.
Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcasts, Apple Podcasts, and Spotify.
That's exactly what I needed to know. Simple information from good people.
Investment advisory services offered through AE Wealth Management, LLC.
Gumbo Nation, this is Dwayne Stein. My team and I make dreams come true daily. Buying a home could seem stressful if working with the wrong lender. Mortgage Gumbo removes that with our exclusive pre-approval process called Fast Track. Don't let other lender horror stories scare you, like last-minute turndowns leaving you homeless. Get your exact buying power so you can shop with confidence. When buying a home, you don't want a lender right most of the time. With Fast Track, we get it right all the time. Visit snapsendandsave.com.
If you like money, you'll love the Winning at Life app. On the Winning at Life app, you can hear the Ask Gregory podcast, where you'll find episodes based on a financial topic. So if you're looking for help on a specific situation, there's a good chance you'll find it on the Ask Gregory podcast, including episodes on 401ks, taxes, stocks, Social Security, gold, and whether or not you should buy an RV. Hear the Ask Gregory podcast on the Winning at Life app, your wallet's favorite app.
Less than half of Americans have drawn up a will. If you don't have one, you know you need to get one. But what if you do have a will? Is it up to date? Has anyone in your family been married, divorced, or passed away? Have any new family members been born or adopted? Don't leave your loved ones in a bind. Call me, and we'll make you a plan or update your existing plan. Hi, I'm Wes Blanchard, an estate planning attorney in Metairie. What's your plan? Find me at wjblanchardlaw.com.
The Ricks Report with Gregory Ricks.
At the core, I always tell people, I'm not here to make you rich. I'm here to make sure you don't run out of money, that you don't run out of income. That's how I look at my job. Over time, saving, making good decisions can make you rich. But what you have is, what is your core thing? Your core thing should be making money. And your core thing, you should set aside money to work elsewhere. It doesn't necessarily mean you have to put it to risk. You could put it to safety. But your core thing makes you money, or you tell me your core thing is the market, day trading, or gambling in the market. It shouldn't be. You should have a core thing that makes you money, and you peel some off for the future when you're done with your core.
Winning at Life with Gregory Ricks. Find us on the Winning at Life app or winningatlife.com. Investment advisory services offered through AE Wealth Management, LLC. Investing involves risk, including the potential loss of principal.
I'm hooked on kissing you, getting you turned on, buzzing and loving.
Winning at Life. Live Financial News Talk Radio. Hey, I've got macro alert here, something we put on our blog at GregoryRicks.com from the office. Global Chief Investment Officer Scott Minard, and is basically titled Weak Data, Fiscal Uncertainty Will Delay Fed Tapering. The Federal Reserve has been trying to clear a runway for tapering announcement, but a recent economic data have thrown a monkey wrench into that plan. I always like adding that to the wrench. But August payroll gains came in nearly 500,000 less than expected amid the Delta COVID surge. September payrolls could also disappoint given that restaurant activity, a primary driver of recent job growth, has continued its decline. And the Delta effect's also evident in August CPI data. The categories they've highlighted as transitory were again the main story, but this time to the downside, and travel sector saw large price declines amid that. So those are some of the indications of what I was referencing early in last segment, talking to Dwayne about this, which means tapering's going to be put off. So it is going to happen in the future. It's just going to be another reason the Fed in this meeting this week is going to once again put off that. And we have Dwayne Stein here with us on Winning at Life. If you'd like to join the conversation, 504-2600-995. And you have some other numbers to us regarding the forbearance, Dwayne. You had mentioned before we went to break.
Yes, sir. So if we break down the forbearance, and this is going to kind of go with, it depends on, look, I'm a glass half full guy. Right? I mean, there's no doubt about it. But with that being said, I think what makes your show work and what I've learned from you is facts are facts. And what we do on this show is give our opinions on where we think it's going. And, on your end, you're right, a ton of times. On my end, I like to think, hey, I'm trying to reach your level, right? So let's look at this, and then we could kind of talk through it. And this is what I'm talking about to sort of back up what I was saying. So forbearance, this is how it's broken down. So initially there was about 5 million folks in forbearance, okay? And of those that have exited so far, okay, 23%, so let's just say 0.25% are current. This is folks that have exited. They're no longer in forbearance. 13% made a lump reinstatement payment and brought their loan current, right? That was for folks who went, yeah, I'll take a few free months off. What the heck? Then made their payment and got back in. 7% paid off loans through forbearance or a home sale. We've talked about this a lot on Mortgage Gumbo. Here's why people aren't just going to let their homes go. They're not going to have to. You get too far behind, for sale. Your house is worth more than you ever thought it would be, so the bank's not going to let you just walk away. And why would you? You're going to walk away with some money, regardless if you can't make the payment or not. But here's the numbers I was talking about, Gregory, before the break, okay? And this is why I say we need to keep an eye on this. 28% are in deferral plans or partial claims, okay? Meaning they've made some sort of arrangement. The word deferral means kick down the road, not paying you today. I'll gladly pay you Tuesday for a hamburger today. That's the wimpy theory. 12% are exited into a modification. What that means is, hey, I'm not back to where I was beforehand, so can we just pay a little bit less? Maybe for 6 months, the investor says, hey, listen, we'll let you just pay the interest only on this, so this way your balance doesn't keep going up. 16%. So right there, those two numbers right there is what I'm telling you. 28 plus 12, whatever that number is, Chalmette math, 40%. 16% canceled without a loss mitigation. That means they're in the process of a modification or, listen to this, still not reached. So they just ain't answering the phone. So if somebody's not answering their investor calling them, Greg, you think they're like, I'll get back to that.
Oh, you mean still not reached, like we haven't had contact with them? Like these are missing persons now.
Right, like, I'll get to them. No, not reached. It's probably, let me just see if I can avoid this. So now we're up to 56%. Now, here's what they want to highlight. Hey, only 0.65 of exits to date have been in other resolutions, which include short sales. So what that means is the 1.5 million homes that are still in forbearance, what equals out to 2,400 homes. Well, think about this, guys and listeners. If they magnified that times 10%, heck, 100%, and you put 240,000 homes on the market, guess what? It could be absorbed right now, right?
Oh, yeah, I guess so.
That's that kind of, when people go, the bubble, well, that's how I pop your bubble theory, right? But when you look at homes and like Gregory, like you're saying, they want to make you believe, it's not going to be no big deal. There's going to be homes. It's just not going to be, and we tried to tell people over the last year and a half on your show and on mine, it wasn't going to be like all of a sudden foreclosure happened. This is going to be a next summer event. Like, it wasn't like, hey, foreclosure's over, get out. Well, no, now things start getting worked in, your modifications and all that. But when you have 56%, you haven't even talked to, they're in a modification, or they've deferred it down the road, eventually that stuff, it's what I call the pyramid factor. All right, I'm going to take Discover, I'll pay Amex, then I'll take Amex, I'll pay Visa. Eventually that pyramid, you get to the top and you go, I got nowhere else to go. That's what's happening right now, and they won't say that, and they want to make it sound good, but what I think we're seeing right now is pyramiding. And eventually those homeowners are going to have to get out or sell, and that's where down the road you're going to see some opportunities. But right now you just don't, the housing's not there. So that's where the bubble thing comes into play.
Yeah, and, we had recent decision by the Supreme Court that said you just can't keep doing this without actual law. So we're seeing put off, and they keep trying to cover these problems. We really are going to be facing this subject in 2022 and its impact, and there will be an impact from it.
Well, and so that's why I think when it comes back, Gregory, are we going to face this with 4.5%, 5% interest rates? I mean, that's the biggest thing, right? I mean, and that's what I think when you look at it and you've got this pyramiding, they know down next year at this time, they're going to be dealing with this. The folks who go, you know what, I can't handle the interest only. The full-time job didn't come back. I only got the part-time. Or, you know what, we could see all the jobs in the world, but I just don't want to work at a fast food joint. So at some point, that's what's going to happen. And now you want to have issues. Well, mix in, all of a sudden 4.5%, 5% interest rates. That's why, hey, you're tapering and all that. They got to just keep being careful with that word and don't scare people.
Well, they're going to, and for everybody to understand, tapering means stopping the bond buying, which is equivalent of going below, creating negative interest rates without them being negative. We're not going to see the Fed rate rise for a while, but this tapering and putting money into the system is coming to an end. With that said, it's not happening now, probably not this year. because we're already on the back half of September. So we got 90 days left in this year. You get past this month. It's when you start thinking about it, it's here. So this is more of what we're going to be facing in 2022. We'll see more volatility in the market. You will see interest rates move up some, but I don't think we're going to high interest rates. And then is this transitory or not is going to show up and be kind of dealt with in 2022 as well. Inflation is here, but probably not quite so extreme. But hey, we may see Social Security checks go up 6%.
Absolutely.
Next year.
Yeah.
And that.
Yeah.
So there's a lot to sort out.
I am tickled to hear the statement that 4.5% interest rates are going to be a huge drag on the housing market, considering our entire lives up until just a few years ago, 4.5% was considered pretty loose and generous. But I guess it's all relative. When we're used to 3% interest rates for years and years and years, 4.5% would be downward pressure on all that. It just sounds funny.
But we do have pressure coming in the future. It's going to get up there.
Mm-hmm.
It's just probably past midterms.
Yeah.
I like that
And
theory, too.
again, I'm throwing out 4.5%. I'm not saying, hey, next July somebody calls in and goes, hey, it's not at 4.5, it's at 3.62, right? But but what does that then do, right? Well, all of a sudden, guess what? Now, when you start looking at home pricing, what has to happen? Well, it's not going to plummet, folks. That's why you're not going to have a bubble. But, what you're going to see is stabilization, I think, if anything. It's not like all of a sudden your house is going to just depreciate, but it's going to stabilize.
Well, the other part is getting that segment back into the market as the repos and stuff back in will help stabilize that and have more properties for sale. And that's going to help stem the inflation on real estate prices.
All right, we got Dwayne Stein of Mortgage Gumbo with us, Gregory Ricks, the financial advisors across the table. If you have a question for either one of those, financial or mortgage related, grab your phone and call one number, 504-260-0995. I'm James Parker. We are Winning at Life with Gregory Ricks.
You all are so good. I've listened to you for years.
Ask Gregory is a financial podcast from the guys who bring you Winning at Life with Gregory Ricks.
I am near retirement, and I wish I would have been listening to y'all for the last couple of years.
Learn the ins, outs, do's, don'ts, rules, and tools of the financial world.
I have a broker. He has no idea what you and I just talked about.
From your 401k to your IRA to your pension to your Social Security to your Medicare.
Hi, Greg. Appreciate your service to the community.
From your ETFs to your precious metals.
The program helps to ground me. There's some personal, real life there.
Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcasts, Apple Podcasts, and Spotify, and wherever else you can find podcasts, probably.
That's exactly what I needed to know. Hey, I love your show.
Investment advisory services offered through AE Wealth Management, LLC. The firm is not affiliated with the U.S. government or any governmental agency.
If you've been listening to Winning at Life for a while now, you probably already know that estate planning is more than just a will. You may need a trust. You definitely need both of your powers of attorney. So what's your plan? Hi, I'm Wes Blanchard, an estate planning attorney of offices in Metairie. Listen, don't leave your loved ones in a bind. Call me, and we'll make you a plan or update your existing plan. Find me at wjblanchardlaw.com.
Most people think of Crime Stoppers as only a tip reporting line, but we're so much more. Crime Stoppers GNO has worked in our area schools, offering prevention presentations on trending topics from drugs, bullying, online safety, suicide prevention, and much more. And we have a high school teen leadership program which provides students with a first-hand look at the criminal justice profession as a future career, while learning to be an advocate for their fellow students. So to learn more, visit safeschoolsla.com or call 504-837-8477.
If you like money, you'll love the Winning at Life app. On the Winning at Life app, you can listen to the show live 6 days a week. And if we're not on at the moment, you can hear a replay of the latest episode of Winning at Life. Whether you're getting a late start on your retirement savings or keeping up with the financial news, Winning at Life with Gregory Ricks is there on demand. Hear the Winning at Life show on the Winning at Life app, your wallet's favorite app.
Fox News, I'm Karen McHugh. An FDA panel says no to COVID booster shots for all.
Yesterday, an FDA advisory panel tasked with reviewing the effectiveness of a third Pfizer shot overwhelmingly rejected boosters for the general population between the ages of 16 to 64. It's a blow to the White House, who made masks and shots their signature issue.
Fox's Griff Jenkins. Meanwhile, the owner of a San Francisco gym sounds off against Mayor London Breed for violating her own mask rule while at a party.
It's so offensive, but at this point, it's honestly comical. And you know what? I think it's great. She, who is writing the rules, thinks it's safe to be inside without a mask. Then I think that's great news, but I think the courtesy should be extended to everybody else.
Danielle Rabkin on Fox and Friends. America is listening to Fox News.
Winning at Life with Gregory Ricks is a copyright of Down South Strategies for the private use of our audience. Any unauthorized use of this broadcast without express consent is prohibited. For podcasts, show information, and contacts to our sponsors, go to winningatlife.com or download the Winning at Life app. If you've got a financial situation and you're not quite sure what to do, you better call Gregory. We are Winning at Life with Gregory Ricks. Welcome. This is Winning at Life with Gregory Ricks. It's the Money Show. I'm your co-host, James Parker. Joining us is Dwayne Stein of Mortgage Gumbo. MortgageGumbo.com is his website. His podcast is also called Mortgage Gumbo. You can find it most of the places you listen to your podcast already. And then you can also hear him on the radio on our flagship station based out of New Orleans, 99.5. Mortgage Gumbo comes on at 9. And then another encore presentation at 1 o'clock. So questions... bring them on, because we have the financial advisor and the mortgage guy right here ready to take it. 504-260-0995. That's 504-260-0995. Chuck in Mandeville. You're on Winning at Life with Gregory Ricks. How can we help you, Chuck?
I'd like to ask a question of Mr. Gumbo. From what you're saying on the radio, this doesn't seem to be an opportune time to make an investment in real estate. I mean, I'm talking about like a single-family home or a condo or a garden home or something like that. Not to live in, but just as an investment to, capital appreciation or whatever in 5 years, say, or something like that. Because rates are going up, so you're saying... now's not the time, correct?
Well, let me ask you this, Chuck. It depends. If you're buying something to hold on to for down the road, I wouldn't say that would be a good investment, period, unless it's something that it's going to be your retirement home or something. Rates are still fantastic. If you're looking for something to make a little bit of money, that you're looking to, hey, I'm going to now become the next mogul of Mandeville, right, Mr. Chuck? Then if that's the case, then the single-family home, the condo, the garden home, unless you already have this in your portfolio, doubles, fourplexes are always going to be a better opportunity just simply because it gives you some headway. These TV shows make investing, Chuck, look like it's the easiest thing on earth. And as a guy who lost his shorts, which I'm proud to say I'm down 10 pounds, so I'm in a smaller size short. But with that being said, I lost my shorts because I thought, Chuck, I'll buy it. I'll build a house. I'll flip it. I'll do this and that. It doesn't always work. So it's still a fantastic time. And as I alluded to on my show earlier, they've lightened. In March, they tightened up the investment property rules. They've lightened those up now. They were only taking in 7%, which meant you had to put down more money. This week they came out and said, hey, the Fed's going to continue buying those. So it kind of alleviates to what Gregory was saying earlier, the tapering. Maybe that's a sign it's probably not going away either. But so, Chuck, I wouldn't say it's not a good time. And your finances more than any. I know we've talked about it on the show with Gregory before with callers. You just got to be careful because chances are, my man, you're not going to that one home isn't going to get you where you want to be, especially in just a 5-year time.
Another question for you, Chuck. Go ahead.
Just real quick. Please, is if one would have the cash to buy a reasonably priced home, whatever they go for, not a mansion, so you wouldn't have to have a mortgage. Would it be better to wait till, like Gregory says, rates go up during next summer maybe, and house prices fall? Would that be a better strategy?
We don't know if, and that's the question I was going to ask you. Are you thinking about leveraging, which is another term for borrowing money to buy the property, or cash? If you're in a cash position, you're not going to have pressure on you, and you're in a much better position. And once again, like stock investing, you have to have a time horizon of a number of years. So you're probably, what you're always looking for on real estate investing is looking for discounts or problem properties to buy at a lower price. Well, that's in short supply right now, and you're not the only one looking for those. So if you're probably paying more than you want to, if you have a time horizon out of 5 years, 7 years, 10 years, you're going to come out fine if you're buying this for the long term. Because look at what property values have done over the past 10. Yep. Don't think about the last year. Think about the past 10 years, the past 20 years. And this is an income machine. Now, the other part of what Dwayne was talking about for everybody listening, why was he talking about doubles and fourplexes? It's diversification. You have one rental property and somebody stops paying rent. You got to go through a legal process to get them out. That takes time. And now you're short money. So if you're dependent upon one, that's carrying a lot of risk, and real estate investing is risky. Ask Dwayne about that. He lost his shorts. And even if it's flipping properties or remodeling and selling, all that stuff, or rental, that's what I've always talked about for the 11 years I've done this show. You go into real estate, I'm going to give me 1-2 properties. Well, you don't have a business. If you're going into this, you should be thinking about getting multiple properties at a minimum. And then you have a safety net, and you have to get out this debt. A lot of them talk about, hey, borrow money and then borrow from this one to buy the next. And at some point, you've got to get this debt out the way. And then you have a manageable business as well. Because then if tough times come around again, and they probably are, just like hurricanes, it'll be back around. And I wouldn't buy all my properties in a hurricane area either, by the way, or flood prone. Right. But see, diversification gives you opportunity. Thanks for the call, Chuck.
Okay.
Thank you, Chuck. Okay, so I keep hearing allusions to this transitioning from a seller's market to a buyer's market. What numbers are you watching, Dwayne, to track that?
So, what's the easiest way to look at things? First off, it's still it's a seller's market right now. Make it is a seller's market. But here's what I'm seeing, okay? In April, and this is according to Redfin, in April, you had what they call competitive, right? When they're looking at multiple offers, okay, competition, bidding wars, right? Let's call it that. In April, it peaked out at 75%, 74.3 to be exact. That means 3 out of 4 houses had multiple offers on them, okay? Now you're looking at it's at 58.8. Well, that's a huge drop, 15%. So while it's still a seller's market, okay, it's still a seller's market, no doubt about it. But when you're looking at dropping from 75% down to 60%, well, now what that means is this. while you're still looking at a full price offer. Don't get me wrong. Maybe you're not having to go in against 10 people where you got to pay 20 to 25% over asking. Maybe it's full price to $5,000 over asking. So that's what I look at is if there's, and it's not less competition, meaning you don't have qualified buyers, but people are starting to go, hey, you know what? I just won't pay that then. And those are the things that it doesn't mean a bubble, right? But it just means, hey, I just won't pay that. I'll go find that other house. So you have a lot less multiple offers, a lot less bidding going on than what you had at the peak in April. And I think that shows a little bit of a sign of, hey, you know what? Not that, look, houses are going to keep appreciating, but we're not stabilizing. However, for you as a buyer, now you can come in at a little bit more fair. You don't have to go cash it in that 401k or go borrow money to come in over asking is basically what I'm seeing. And those are kind of the trends that I look at that's a little bit different than just Joe Blow. I look at, hey, what's behind the scene? How many people are walking through a house? Let's face it. If nobody's walking through a house, they're not selling it, right? If a ton of people are walking through, well, James James could say, all right, hey, look, now we got 10 offers. We're going to have the house open from 2 to 3 on Saturday, and all the offers have to be in by the end of business that day. Well, now you're starting to say, hey, we'll have open house from 12 to 3, and then also 3 to 6 on Sunday.
If someone's renting right now and they're thinking about buying, but they're in a unique position where if it's not a good time, they can wait. They can just sign their lease for another year and wait till the market gets better. What would you tell them if they're thinking about buying, but they have the option to wait?
Get pre-approved. I mean, this is going to be a shameless plug, but go to snapsendandsave.com and click purchase. Get pre-approved. They're good for 120 days at a time. And the only reason it's good at 120 days, that's how long your credit's good for. So even if you just sign that 1-year lease, let's look at what your buying power is going to be. And as long as you're not going, well, we're also in the market to shop for a car, we're trying to have a kid, or something like that, and we know the finances are going to pretty much be where they're at, then we have the opportunity to show them now what their buying power is going to be.
All right, questions for Dwayne or Gregory, 504-260-0995. I'm James Parker, and we are Winning at Life with Gregory Ricks.
The question isn't if you're going to retire. The real question is, are you going to run out of money? Nobody wants to be a burden to your loved ones. And it doesn't happen by accident. You have to plan for it. Hi, I'm Gregory Ricks. That's what I do. Gregory Ricks & Associates with offices in Metairie, Mandeville, and Gulfport. 504-832-9200 or GregoryRicks.com.
Investing involves risk, including the potential loss of principal. Investment advisory services offered through AE Wealth Management, LLC.
Mosquitoes. We know them as flying, blood-sucking pests. But did you know that mosquitoes are actually highly intelligent? They can smell human breath, our sweat helps them choose their next meal, and they use our body heat to find just the right place to bite. Outsmart mosquitoes with help from Mosquito Joe. Mosquito Joe has this time-release capsule that they spray that slowly releases its mosquito death over a course of a month. NewOrleans.MosquitoJoe.com. NewOrleans.MosquitoJoe.com.
If you have a financial situation and you're not quite sure what to do, you better call Gregory.
I wanted to talk about teachers and those that aren't participating in Social Security. When they were teachers, policemen, regardless of your age, if you're not paying into Social Security through your payroll, your Social Security benefits are going to be affected in the future. One of the key things to do is think about that now and how you're going to feel at 60, 65, or 70 when you find out that if your spouse dies, you might not get their benefits, that you're not participating in Social Security. So if it's not coming out of your check, Social Security benefits down the road are going to be greatly affected. You might want to investigate now how that's going to affect you.
Gregory Ricks & Associates, 504-832-9200 or GregoryRicks.com. Investment advisory services offered through AE Wealth Management, LLC.
The Ricks Report with Gregory Ricks.
My age that I can claim Social Security is 66. If I wait to 67, I'll get an additional 8%. But you have to wait the full year. Do they prorate it like if you do it at 66 and a half, then you get 4%?
You get a credit for each month you defer. And here's a little technicality. Delayed retirement credits don't get calculated and applied till the beginning of the next calendar year. So if you're deferring and getting delayed retirement credits, and then you turn it on middle of another year, those delayed credits will be factored in the beginning of next year and made up for what you didn't have and paid at that higher rate at the next calendar year.
Winning at Life with Gregory Ricks. Find us on the Winning at Life app or winningatlife.com. Investment advisory services offered through AE Wealth Management, LLC.
Ain't it fun?
Hey, how you doing? This is Winning at Life with Gregory Ricks. Welcome to the Money Show. I'm your co-host, James Parker. If you have a financial situation or a mortgage-related question, not quite sure what to do, you have stumbled on the perfect show and the perfect hour of the show. We got Dwayne Stein with us and Gregory Ricks, the financial advisor. So 504-260-0995, 504-260-0995. Interesting thing about Dwayne Stein in the mortgage business, he's a little extra busy after the storm. I was trying to talk to him earlier this week, and his schedule's pretty full. Dwayne, why are you, as a mortgage guy, so busy after a big hurricane? What are you doing for your clients or potential clients, friends and family, or what's got you so busy?
Well, what happens is anytime you have, as soon as you have and you hear the governor come on and say, hey, we've been declared a FEMA disaster area, right? Well, the loans that were already in place, the loans that are coming up that need to close, well, there's rules that go into place immediately by the investors depending on loan products, right? So you have to immediately scramble and go, okay, here's what I need with this investor and with that investor. And, look, we don't deal with something like this all the time, but, like Charles last year, for instance, took it on the chin. And there's a lot of times that, I do business in other states. So a FEMA disaster area might have been last year when Dallas froze over, right? Those type of things. So I'm aware of what's going on in these. And it's as simple as, if you're buying a VA or you're doing a VA loan, right, at the time, and it's a disaster FEMA area, well, that buyer or that client, then as long as they say, hey, I'm okay with the property, then you don't have to do anything. They write a letter, they give it to you on a certain form, and you're able to move forward. Let's say it's somebody that's with a conventional loan, okay? Well, now, with a conventional loan, James Parker's got to take certain pictures, right, of, his address inside the house. There's certain things that I need to look at to send to the investor. And, a lot of the agents and people are like, well, it's fine. I don't mind. Well, the investor who's about to put $300,000 of his money up, he don't know that in South Dakota or wherever he's at. So they want to see certain things that have been done to the house that everything is okay. Then you move over to an FHA loan. And an FHA loan, that's a whole new animal. Now I've got to do what's called a reinspection. Now I, at my cost, well, at least that's the way I do it, I send out another appraiser has to go out. And do a whole nother, it's a reinspection appraisal, but they've got to go in and make sure, boots on the ground on the property, and look over everything. And there could be a tarp on a roof, that's fine, but the appraiser has to be there to make sure a tree didn't go through. And they've personally got to go through that process. So, and for us, those are the Fannie Mae, the Ginnie Mae, the Freddie Mac rules. Right? But all this week I'm getting calls, James, and from folks who are going, hey, is this true about a VA? And they're requiring the appraiser to come out, right? Because some of my folks who are purchasing a home, well, they were selling their other home first. and they need that to sell. And I had several where it's a VA loan. And I'm like, well, this is all you need. But their lenders requiring them, because they have what's called overlays, to get the appraiser to come back there. So it really just depends on what you're looking at. But, it stinks. Listen, nobody wants to deal with this. And it's a nightmare. But, I take pride in making sure that I know the guidelines and I know the rules and what has to go into place so people can get their money, right? I mean, if you were expecting 80 grand or you got to pay off debts. And the other thing that I did for people too is I gave everybody free 30-day extensions. I didn't think somebody should have to pay a higher rate because Ida came through and they were without power for 2 weeks. Well, the investor, guess what? Those dates still keep going when you're looking at your rate lock being in. So we extended everybody on that. And I think that's important because it's just the right thing to do. The same with me paying for the re-inspections on the appraisal. I had over 20 of them. So at $500 a piece, you could figure out pretty quickly what I had to come out of pocket. But it's not about the cost. It's about doing what's right. And then lastly, what you have is, okay, the adjuster came out, right? What do we all want to do? I need to get everything fixed, right? I need this. I'm ready. Now I got the check. What do I do now? So those are the things that I've had put in place with me and with my company to make sure that this is the most important part. We got to get people their checks signed. We don't need to be shipping this stuff off to different places. And, hey, hopefully it'll take a couple weeks for them to review. So we've streamlined some things to where I can get checks back in people's hands same day, immediately, by them coming to the office, up to a certain amount. I don't want to endorse the $200,000 check where it's a total loss. I need somebody else to take care of that. But guess what? Those people also aren't coming to me right now because they're not living in their house. If Parker's had 3 trees go through his house, he's not living there right now. So I let the big dogs handle that, and I'm handling immediate stuff, the fence, the electrical, the roofing, all those types of issues is what I'm handling because we got to get people that money back because, the word normalcy that everybody throws around, we want to try whatever that word is, that's what we want to try to get back to as soon as possible.
So you had something on the order of 20 of these loans in the pipeline that you sort of had to start back over on? Is that what I'm hearing?
We basically, yeah. So in the last 2 weeks, what we've been doing is, especially on the FHA, having a look at reclosing these loans. So you can imagine, and I get it, and everybody, and I'm the guy that's got to deliver what the rules are. And when people don't like that, what happens? They start. That's where they go here. Schmuckatelli saying, "Well, we don't have to do that." Blah blah blah. Nobody has more of a streamlined process than we do because we deal directly with the government service entities. We're not a broker.
Right. How long is it going to take you to catch up on something like this before things are back to, and then we'll use the air quotes,
I gave a goal of my team to have it done by the end of September. And it's tough because you want to I've got new customers who are ready to buy, right? This week we've started seeing the phones ring back off the hook because it's like, okay, I'm back in my house. I got away from my little vacation and all that, and now we're starting to see a little bit more of where we're getting back into the applications. The phone's starting to ring off the hook. All right, I'm ready to buy. Let's take advantage of this. And then the refis, too. I mean, so I gave them to the end of the month to get this handled, and we're taking care of all those costs and different things like that for the buyers and those folks refinancing.
What's coming up on Mortgage Gumbo at 1 o'clock today?
Man, I've got Florida Lee, the Legends of Law and Title, are joining us, and they basically talking about, title lock and all that stuff we've talked about. They're just talking about, hey, differences between owners and lenders, title insurance, the products that they offer, and just some different things like that, and really how to be protected and why it's so important and what you deserve more than just your title company shouldn't be somebody that's just sitting there putting a stamp on things. So those guys, Jeff and Jared, are going to join, and we're going to knock it out the park for them.
Did they have some special storm-related angles that they're going to take on this? Because, a little bit of legal expertise is probably useful right now.
Yeah, they do, and it is. But, one of the things they're doing, which is impressive, that I could tell you for some of the other folks that I work with, title companies, not that a bad thing, these guys are literally, because what's jacked up right now? Hey, anybody listening to this knows if they order stuff from Amazon, they're getting the old delayed delivery, right? We're like, oh, my God, what do you mean it's not getting to me tomorrow, right?
Right.
Well, what these folks are doing, which is amazing, is, hey, every day at 3 o'clock, they're driving around the state, hand-delivering checks because it's only Baton Rouge, New Orleans, and major hubs that are getting these FedExes, and they want to get the money into people's hands as opposed to using the storm as an excuse. That's the kind of folks that, Gregory has his total wealth authority and me with the total home authority. That's the kind of people that we like to deal with.
All right, that all sounds good. Now, there's a couple ways you can listen to that. You can, if you're listening to our flagship affiliate, New Orleans, WRNO, just stay put. He comes on at 1 o'clock. If you're listening on the Winning at Life app, the live stream, just stay put. It'll come on right after that. If you can't catch it live on those two arenas, you can go to Facebook Live, where Dwayne is streaming. Is this under the Mortgage Gumbo Facebook page or the Dwayne Stein Facebook page, or both?
Yep, no, mortgage, both of them, actually. But and then, look, I'll leave you with this. Hey, don't panic with the rates. Gregory's spot on. Hey, everything's going to be fine. And look, even at 3.5%, you're fine.
Yeah,
you're fine.
Yeah, you're fine. Absolutely.
Yeah.
All right, so mortgagegumbo.com is his website. If you have a financial question, we got to let Dwayne go, but Gregory's going to be here for another hour, so bring it on. 504-260-0995, or you can give us a call or text from the front screen of the Winning at Life app. I'm James Parker. We are Winning at Life with Gregory Ricks. Investment advisory services offered through AE Wealth Management, LLC. Winning at Life with Gregory Ricks is for informational purposes only and does not recommend the sale or purchase of any specific securities, investments, legal advice, or tax advice. Investing involves risk, including potential loss of principal. Raw conversion is a taxable event and may have several tax-related consequences. Be sure to consult with a qualified tax advisor before making any decisions regarding your IRA. The information and opinions contained herein are provided by third parties and have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed. Neither AE Wealth Management nor advisors providing investment advisory services through AE Wealth Management recommend or facilitate the buying or selling of cryptocurrencies. The firm is not affiliated with the U.S. government or any governmental agency. The firm offers insurance services. We are Winning at Life with Gregory Ricks.
From the Gregory Ricks and Associates Wealth Management Studios, WRNO FM, New Orleans, an iHeartRadio station.
Missing in Florida. I'm Pam Puso, Fox News. Police in Northport are combing a nature preserve where the family of Brian Laundrie believes he might be. Laundrie vanished earlier this week as the search for his fiancée heats up in Wyoming. Gabby Petito was traveling cross-country with Laundrie, but abruptly cut off communications with her family last month. After that, Laundrie returned home to Florida alone, and he hasn't been cooperating with police.
Police say Brian Laundrie is only considered a person of interest, and he is not wanted for a crime right now. But we are learning that police are now looking for both Gabby Petito and Brian Laundrie because his family says he's been missing for days.
Fox's Charles Watson. Last night, police spoke with Laundrie's family inside their home as protesters gathered outside. The details of the conversation have not been revealed. Police in the nation's capital are on high alert as right-wing protesters rally. The Justice for J6 demonstration is meant to show support for those arrested after the January 6th riot. Law enforcement is concerned violence could erupt between demonstrators and counter-protesters. Dozens of National Guard troops are on standby. An encampment of migrants has taken shape in Del Rio, Texas. Authorities say most of them are from Haiti, and the Associated Press says the White House will start flying them home tomorrow. Texas Congressman Kevin Brady spoke to Fox's Cavuto Live.
States like ours shouldn't have to devote billions of dollars to keeping our communities and neighborhoods safe when this is President Biden's responsibility.
Many of the migrants are bathing and cooling off in the Rio Grande River. The Del Rio border crossing is now closed to all vehicle and pedestrian traffic. America's listening to Fox News.
it's Brett Larson, inviting you to download and listen to the new daily Fox on Tech podcast. There's part of a colorful late 90s iMac on Mars. It's an idea that seems a lot like Kickstarter, called Build It. This isn't the first time we've heard about North Korea hackers trying to get a leg up on COVID-19, a range that was used for satellite TV service in the 70s. Get the latest trends in technology, cybersecurity alerts, and gadget news daily. Subscribe and listen now by going to foxnewspodcast.com or wherever you get your podcasts.
Connect to Fox News Audio on the Fox News app. Listen to hear your favorite hosts like Brian Kilmeade, Jimmy Fallon, and Guy Benson standing up for what's right, live and via podcast. Just click listen, then swipe right and hear the latest news updates on your time. And scroll down to hear the latest podcasts from Fox News. And it's even easier to listen in the car with Apple CarPlay and Android Auto. Get programming alerts and notifications. Fox News Audio is on the Fox News app. The voices America trusts. Download it now.
No one was hurt when the cabin of an Air France jet filled with smoke shortly after takeoff. The Paris-bound Boeing 777 safely returned to Beijing. Passengers are being rerouted. A car crash has claimed the life of a Connecticut police officer, and a fellow officer is under arrest.
6 New Haven officers were in a Rolls-Royce in Las Vegas at about 4 a.m. Friday morning when the driver, Officer Robert Ferraro, lost control in an intersection, hitting another car, then utility poles, and then a fire hydrant. 35-year-old Josh Castellano, a 7-year department veteran, was killed in the accident, and Ferraro, who showed signs of impairment, was arrested and charged with DUI and reckless driving. Saturday, New Haven Police Chief Renee Dominguez remembered Castellano.
He is the officer who came to work every single day happy to be here. He didn't care what his assignment was. He was happy. He didn't complain. He did his job with passion.
None of the other officers in the car were seriously injured. Kevin Uretsky, Fox News.
Officials with the National Transportation Safety Board are heading to Florida to investigate a deadly crash involving a Tesla. Earlier this week, 2 people were killed in Coral Gables when the Model 3 collided with a tree. It's unclear if the car's partially automated driving system was activated. It's also unknown if speed was a factor. A monumental project is moving into the next phase in France.
France's Notre Dame Cathedral is finally stable and secure enough for artisans to start rebuilding it. That announcement made Saturday by the French government. Negotiations will now begin with some 100 different companies bidding to take part in the mammoth reconstruction project.
Fox's Paul Stevens, a fire tore through the cathedral's roof in 2019, knocking down its iconic spire and threatening the entire structure. Pam Huso, Fox News.
Hey, James Parker here from Winning at Life. Something that's come up on the show over the last 10 years is that if you're not at your old job, maybe your 401k shouldn't be either. But do you really know why we say that? It's a funny thing. We put a few $100 in our 401k every month. It ends up to be thousands of dollars every year, hundreds of thousands of dollars over our career, and you don't really know that much about it. How do you invest it? How do you diversify? What do you buy? What do you avoid? You've got a financial situation and you're not quite sure what to do? Ask Gregory. Ask Gregory is our new podcast with these financial topics broken down into specific little chunks. So if you have a financial situation or you just want to learn more about money, Ask Gregory. Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcasts, Apple Podcasts, and Spotify.
And I want to thank you for all of your help.
That's exactly what I needed to know.
Investment advisory services offered through AE Wealth Management, LLC. Hey there, how you doing? This is Winning at Life with Gregory Ricks. Welcome to the Money Show. I'm your co-host, James Parker. If you got a financial situation, not quite sure what to do, this show might be able to help you out with that, because the guy that's doing the show with me, Gregory Ricks, is a financial advisor, has been in the business for almost 40 years. Let's not try and date him too much here. And he's been answering your questions on the radio for over 11 years. So there's one number to call in, 504-260-0995. Because I don't want you running around the rest of the weekend worrying about some financial problem when you have access
to a guy who answers people's questions like this for a living for decades. Gregory Ricks is his name, and you're going to call him right now at 504-260-0995. You're going to have a quick little conversation, and then you're going to, if not get a flat-out answer, at least get guidance in the right direction, get you a little push toward the answer, and then you can go about enjoying your weekend. There's one less thing you got to worry about this weekend. 504-260-0995. Anything you want to mention before we get into the callers?
Oh, I have a stack of stuff to mention. And when we come back from the break, which is a few minutes away, we're not going now. I'm just letting you know I'm going to talk to you about why you've heard some best ofs the past few weeks. I'm going to bring you up to speed. Our audience has been inquiring about us, so we'll update you on that and what's been going on. But once again, we're here to help you improve your money decisions. So once again, welcome to the show.
Tom in Gulfport, you're on Winning at Life with Gregory Ricks. How can we help you, Tom?
Yes, I had a question involving precious metals. I've been investing in the last couple of years in silver and been thinking about going into gold. And how do you feel about precious metal investments?
In a diversified portfolio, maybe you could, maybe have a few percent there. That is not something I actively seek out. When I look at how that's done over the years, stock markets outperformed there. And that's most other asset classes. I just want to make sure I'm there. But once again, if you're going to do metals, investing requires a time horizon. And there's a cost to buying that metal, there's a cost to selling that metal, and a cost to housing it. And I'm not a big fan of it, but if you're going to do it, you have to factor those in, and I'm not really wanting to buy it for somebody else to store or hold for me. And if you're using qualified money, you've got to have a trust account set up and have to use a third-party trustee because because it is different handling regarding from the IRS standpoint there. So how much, when you kind of, and I've got noted on the screen here that you were inquiring about coins, and sometimes people get into this, this coin came from a shipwreck or such. I'm kind of more about what's the spot price of gold? What's the spot price of silver? And that's kind of, once again, been trading in a range that's been consistent for quite a while. And then we sometimes, Tom, you ask this question, I've got a lot to say about it. And I'll turn back to you and see what other questions you have. But sometimes we get into what's the reason for buying the metal. I'm not a big fan of buying coins or like old coins or something. I think people overpay for those, and then they never get back right. When you're at least buying based upon the spot price of gold or platinum or silver, you know where you stand and you know what you can sell it for, subject to the fee from that standpoint. And I would rather have control of where it's stored because I know it's there versus that. And once again, you can do this without handling them. If you're wanting to buy metals based upon the spot price, there's exchange traded funds to do that as well.
Yeah.
What's your thoughts, Tom?
Well, I was just kind of wondering because I've seen silver prices going up, and I'm just wondering, if they're on a really good rise or if they're just kind of going up and then stabilizing it. So,
sometimes we've got to see metals have a competitor now, and from a silver standpoint and gold, and we've talked about what's available on the planet, and there's a possibility better than half have been mined out. But once again, other than somebody being buried with the gold or it's sitting at the bottom of the sea from a shipwreck that people are looking for, whatever we mine never goes away. It doesn't just get used up and disintegrate. Like pulling oil out the earth, it gets used up. It's not going to be around just because we pulled it up. So you have this one thing about the metal, it's going to always be there. And ultimately, there is a finite amount. With that said, gold, silver, and other metals have competitors, and they're called digital currency. I don't know where that goes, but I'll tell you, the governments in general are not big fans of it. Why? They don't control it. And actually, U.S. government doesn't like cash. Why? They don't know where it is at all times. And there's two big uses that's problematic to governments. Criminals use it, and tax cheats like cash, meaning to avoid paying taxes. So that's just where I'm kind of going, that digital coins are competitors, but may not always be. And you could see where all of a sudden money shifts away from digital, and you kind of notice that metals are going up or metals are going down because of the shifting of that. So that's just some of my overall thoughts, Tom, on that. Appreciate your call.
Thank you, Tom. All right, let's stick with the phones. Yep, 504-260-0995. Crystal in Meridian, you're on Winning at Life with Gregory Ricks. How can we help you, Crystal?
Hello?
Hey, Crystal.
Hey, Crystal. Can you hear us?
Hello?
Yep, we're here. Turn your radio down because there's a delay on the radio versus speaking to us directly.
Hello?
You there, Crystal?
I think we've been seized by the vehicle.
My apologies.
Yeah.
Okay.
All right, welcome to the show. How can we help you?
Hi. I am a single mother. I've never bought a home before, and to be honest with you, I don't even know where to start. I don't have much money saved up, and I understand that this might be a long, drawn-out process because of that, but even still, I don't know where to start or what to do or who to inquire about. So,
okay. Well, first off, we have to get to saving some money. And are you in a situation where you can start saving?
I am. It will be a lot, but there is that room for savings.
Yeah. So first off, well, hang on through the break if you can. If you go away, I'm going to go into your question when we come back from this break and you hear the music playing.
504-260-0995. We'll continue with Crystal next. I'm James Parker. We are Winning at Life with Gregory Ricks. Ask Gregory is a financial podcast from the guys who bring you Winning at Life with Gregory Ricks.
Could this be your Social Security, your 401k, pension, lump sum, your debt, student debt, credit cards?
You all are so good. I've listened to you for years. Sometimes I'll pull over to the side of the road and just listen.
Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcasts, Apple Podcasts, and Spotify. Investment advisory services offered through AE Wealth Management, LLC.
Mortgage Gumbo with your chef, Dwayne Stein.
I would never hesitate to ever call them for anything else that we need.
And I can't say enough good things about Dwayne Stein and his people at Mortgage Gumbo.
I will never, ever do anything as far as a mortgage is concerned without contacting Dwayne Stein and his group again first.
Mortgage Gumbo with Dwayne Stein. 2 servings every Saturday, 9 a.m. and 1 p.m. on News Talk 99.5 WRNO.
If you like money, you'll love the Winning at Life app. On the Winning at Life app, you can hear the Ask Gregory podcast, where you'll find episodes based on a financial topic. So if you're looking for help on a specific situation, there's a good chance you'll find it on the Ask Gregory podcast, including episodes on 401ks, taxes, stocks, Social Security, gold, and whether or not you should buy an RV. Hear the Ask Gregory podcast on the Winning at Life app, your wallet's favorite app.
Half of estate planning is having a plan put together for your loved ones when you pass away. The other half of estate planning is dealing with someone else's plan when they pass away. Sometimes they have a great plan, but sometimes you need a little help. Don't leave your loved ones in a bind. Call me, and we'll make sure you have a plan. Hi, I'm Wes Blanchard, an estate planning attorney in Metairie. What's your plan? Find me at wjblanchardlaw.com.
The Ricks Report with Gregory Ricks.
To determine if your Social Security will be subject to taxation, you have to be aware of the provisional income levels. The following forms of income figure into your provisional income calculation. And the way we get to that is 1/2 of your Social Security income, any distributions taken out of your tax-deferred accounts like IRAs, 401ks, any 1099 or interest generated from your taxable investments, any employment income, any rental income, and get this, interest from municipal bonds, those have to be figured in to determine if Social Security is going to be taxable.
Winning at Life with Gregory Ricks. Find us on the Winning at Life app or winningatlife.com. Investment advisory services offered through AE Wealth Management, LLC.
I know everybody says money can't buy happiness, but it can buy me a boat. It can buy me a truck to pull it. It can buy me a Yeti 110 ice down with some silver bullets. Yeah, and I know what they say.
Hey, y'all. You're listening to Winning at Life, live financial news talk radio. I'm your host, Gregory Ricks. Welcome back to the show. We have Crystal with us. She called 504-260-0995. She's a first-time listener and is looking to save money to buy a house. So kind of core rules, Crystal. You still with us? Good. Glad to have you back. Is emergency savings. So part of this is thinking is you want to have a home because you're going to build equity. Those things do become more valuable. You want to make a good decision, and it isn't like you're also necessarily trying to buy the place to live for the next 30 years. You might be starting out, well, this is my starter home, not quite what I want, but this is what I want to start, is building equity in life. And maybe down the road, I can sell this and buy another. So you probably aren't going to get where you want to. And as life happens, and what we strive to, or I do, is always, since getting out of school, is to increase my knowledge so I can increase my success, which means I can make more money. And then it ties to, I guess, have more things and have a better home. And that's progressed through my life. But it also started out with making good money, improving income, and then saving. And one thing about it is there's costs that come with being a homeowner too, because somebody's going to have to fix it. If you're renting, you don't have to worry about the fixing of the property, but you as a homeowner does. There's this lawnmower, the grass has got to be cut, storm can damage stuff, and then, you've got to pay insurance. It's going to go up. Government wants some taxes, and next thing you know, they want to upgrade something, so the millage increases a little bit. So you always kind of have those things going on, and it's not just the insurance. I mean, the principal and interest, the P&I. The principal and interest only. You've got the insurance and the taxes that's built into that payment as well. So 40% of that could well be your insurance and taxes that are put away with every mortgage payment. So to start with, the core thing we always talk about on Winning at Life Radio is emergency savings, because you're going to need that even after you put your down payment into that house for the unexpected things. And then there's, the curtains, the drapes, light bulbs, stuff that just goes along with, and then something probably needs to be painted if it's not a new home purchase, and likely not. So then we got to get to how much can you save a year, because then you've got this thinking of what, and you probably have some interest. This wouldn't be in mind unless you've done a little bit of looking online or rode through a neighborhood, and you have this idea, don't you, of what you would like to buy, right, Crystal?
I do.
Okay.
And I think I'm in the situation where this this actually is going to be where I'm at for the next 30 years.
Okay, that's good.
I have 2 children, and I'm not looking to, this is not a starter home. This will be where I am, and also I haven't excluded the possibility of a mobile home. Is that wise, or do I just need to stay away from that?
We probably have a lot of listeners that have single wides and double wides, and the kids a few years ago had not known what a double wide is. We're going to say, yeah, they have a double wide. Well, that's kind of like two mobile homes that are attached together. It's double the width of a single mobile home. And rural America has a lot more of those. And I won't say it's a bad thing, but those are not valued the same as a home with a foundation and structure and permanency there. And here's my negative take on those. I kind of look at those whenever we see a storm hitting somewhere and there's a mobile home, it's wrecked. So I always kind of, and don't take, if everybody live in one, I just kind of like, that's a tornado attraction device or structure is how I look at it. So I'm not necessarily a big fan of that because of long-term value. How will that hold up? And is that going, and from what you're saying, you want permanency, and I'm great with that, okay, this isn't a starter home. I'm looking to find the right home to be in from now on. I don't know. I'm just saying that's a question mark for a mobile home and having that permanency for you from that standpoint. But there's a lot of people utilize that, and that's an effective way to get in a home with their income and savings. And so that's my thoughts on that. I'd rather you get into a traditional home if I was giving you guidance, but I don't know everything about where you live and the ability and what price range you're going to be in. But you got to look at, to get to a saving standpoint, kind of having, and that's one reason I asked you, and I thought you might already have an idea of what you're looking for. So you kind of have a value or price range. So then it gets into how much down payment you're going to need for that house, and then how much can you save and how long will it take you to get there? Is that something you can knock out in a year? Plus having some emergency savings. I think at least having $5,000 set aside after you pay your down payment would be a minimal thing I want you to have. Or is this going to take 2 or 3 years to get that savings up? Or is there opportunity that you might have to where you don't have much of a down payment there, that you could get this done in a year? And we had Dwayne Stein with us last hour. He's got a website, mortgagegumbo.com, and he has a radio show as well. He's one of those that he always talks about, you need to get pre-qualified for that. And he might be somebody that you could reach out to his office and ask about, is there any creative financing opportunities for first-time home buyers and such? And some of those, depending on whether you're urban or rural area, there's opportunities as well.
Yeah.
I would most definitely say I'm rural.
Okay.
Yeah. And Crystal, the trailer house question, I really like that, because I think that there's a lot of people who would be, they would be worried about the stigma of even asking the question.
I mean, yeah, but you know what? I have to have somewhere for me and my kids to live. And if I live in a mobile home, it is what it is.
Have you lived in one before?
So it's okay. If you have to, you do what you got to do. And sometimes that's what you got to do.
I don't look, I gave my reason for negativity is the soundness of the structure.
Definitely.
But I've been, and there's people have some awesome mobile homes, and it's the right thing for them. So I don't necessarily look at that as a negative, and that has to do with where you live, what you can afford, and what can you need done. And having that stability for your family, as you keep referring to, is really important. And if that's what you've got to do, I agree, that's what you got to do.
Right. And I lived in a mobile home for a while growing up.
It seems cheaper.
It's definitely cheaper, but,
It is.
but it's for a reason. I still have family members in mobile homes. They're not that permanent. Gregory's right. If this is going to be a 30-year house, a mobile home has a big fat question mark next to it if it's going to make it.
I grew up in a brick and mortar home, and I get that. I do. But right now, and this may not be, I don't know, if it's not a 30-year home, it is what it is. But I think that I'm kind of in that's where I need to go because it is just me. I do have a good, steady job, but I have a teenage son and a little girl, and he's expensive just daily. Money coming out of my pocket. She is a girl, so there's money. Money is the issue. And I live in a mobile home currently. I am tired of this mobile home, and I want a new one, but this is on my brother's property. I don't pay, land. It would just be me putting it on there. I do have savings, but I don't have that $5,000 after the home is purchased savings. I rely a lot on my taxes throughout the year. So that would be where I would get my down payment would be next March.
Yeah. So going back to your brother's property, you have this opportunity that you could acquire a new or newer mobile home and be able to put it on that property. Is that correct?
Yes, sir, because when you buy one here in Mississippi, you have to have land. You can't, that's like the given, the first thing. I do know that.
Okay. You can't park it behind Walmart or something.
I don't know a lot of details about that.
Yeah, you have to have somewhere to put it.
Right.
And, there's companies and businesses that are in the business of doing that, and you obviously are familiar with them. That'd be somebody I reach out to and see what opportunities there are for financing and acquisition on that to help you out.
All right. Best of luck, Crystal. Thank you very much
Crystal.
for calling and sharing your situation. And, of course, single mom with 2 kids,
too.
Godspeed to all of that. I have a hard enough time when there's 2 parents around. I don't know how y'all do it over there. So,
well, I was thinking, growing teenage boy, he's probably eating more. And then I was thinking, a little girl, well, heck, she's going to cost twice as much as the boy. So if the boy's expensive, I think the girl's going to be more so.
well, I'm finding it's a pretty close balance because girls want you to buy stuff and the boys break stuff that you have to replace. So for me, it's been pretty much a push between the boys and girls in my family.
What's the oldest girl?
Ellie?
Yeah.
504-260-0995.
You're way early into this, is what my point was.
We are Winning at Life with Gregory Ricks.
You all are so good. I've listened to you for years.
Ask Gregory is a financial podcast from the guys who bring you Winning at Life with Gregory Ricks.
I am near retirement, and I wish I would have been listening to y'all for the last couple of years.
Learn the ins, outs, do's, don'ts, rules, and tools of the financial world.
I have a broker. He has no idea what you and I just talked about.
From your 401k to your IRA to your pension to your Social Security to your Medicare.
Hi, Greg. Appreciate your service to the community.
From your ETFs to your precious metals.
The program helps to ground me. There's some personal, real life there.
Find the Ask Gregory podcast on the Winning at Life app, the iHeartRadio app, Google Podcasts, Apple Podcasts, and Spotify, and wherever else you can find podcasts, probably.
That's exactly what I needed to know. Hey, I love your show.
Investment advisory services offered through AE Wealth Management, LLC. The firm is not affiliated with the U.S. government or any governmental agency.
2 questions. Do you have a pulse? Do you own anything? If you said yes to both, you probably need a will. You may even need a trust. We all know a lawyer. Do you know someone who specializes in estate planning? Do you really trust the husband of your sister's friend from college? Or would you feel better putting your family in the hands of the estate planning attorney of the Total Wealth Authority? I'm Wes Blanchard. What's your plan? Offices in Metairie and at wjblanchardlaw.com.
Most people think of Crime Stoppers as only a tip reporting line, but we're so much more. Crime Stoppers G&O has worked in our area schools, offering prevention presentations on trending topics from drugs, bullying, online safety, suicide prevention, and much more. And we have a high school teen leadership program which provides students with a first-hand look at the criminal justice profession as a future career, while learning to be an advocate for their fellow students. So to learn more, visit safeschoolsla.com or call 504-837-8477.
If you like money, you'll love the Winning at Life app. On the Winning at Life app, you can listen to the show live 6 days a week. And if we're not on at the moment, you can hear a replay of the latest episode of Winning at Life. Whether you're getting a late start on your retirement savings or keeping up with the financial news, Winning at Life with Gregory Ricks is there on demand. Hear the Winning at Life show on the Winning at Life app, your wallet's favorite app.
Fox News, I'm Karen McHugh. 13,000 migrants and growing beneath a bridge in Del Rio, Texas.
These poor Border Patrol agents do not have the manpower to deal with this right now. This mass of people gets bigger every single day, and when they keep getting dropped off in Mexico by the busload, it's just constantly refreshing the population. We don't see any immigration or border officials on either side of the border. What we do see are hundreds of these migrants just crossing the river. Again, many of them are from Haiti. We've heard there are some from the countries in Africa as well.
Fox's Bill Malugin, the ranking GOP member of the House Ways and Means Committee, says his state can't handle this alone.
States like ours shouldn't have to devote billions of dollars to keeping our communities and neighborhoods safe when this is President Biden's responsibility.
Congressman Kevin Brady of Texas on Fox. America is listening to Fox News.
Winning at Life with Gregory Ricks is a copyright of Down South Strategies for the private use of our audience. Any unauthorized use of this broadcast without express consent is prohibited. For podcasts, show information, and contacts to our sponsors, go to winningatlife.com or download the Winning at Life app. If you've got a financial situation and you're not quite sure what to do, you better call Gregory. We are Winning at Life with Gregory Ricks.
Everything that kills me makes me feel alive. I've been losing sleep, dreaming about the things that we could be.
Hey there, how you doing? This is Winning at Life with Gregory Ricks. Welcome to the Money Show. I'm your co-host, James Parker. If you got a financial situation, not quite sure what to do, well, lucky you, because the guy across from me, Gregory Ricks, is a financial advisor, has been in the financial services industry for almost 40 years and answering your questions on the radio for over 11 years. You just got to grab your phone and call this number. Ready? 504-260-0995. Call that number. We'll put you on the show, and you can get some help from Gregory Ricks immediately. 504-260-0995. You want to see how easy it is? Watch this. Gary on the West Bank. You're on Winning at Life with Gregory Ricks.
Hey, Gary. How you doing? Hey, we're doing awesome. How's it going over there on the West Bank?
Yeah, weather's kind of sucking. But at least it ain't a hurricane.
Yeah, I hear that. How can we help?
I had one quick Social Security question. I'm 85 days away from full retirement date, which is December 13th. And does it benefit me to take it then, or wait till January 13th when we get into the new year? As far as taxes, or even that cost of living raise that supposedly is going to happen, which way would benefit me the most?
Well, cost of living is going to impact those receiving it. Are you retired actually, or are you still working?
No, I'm gonna continue to work.
Okay. Would you consider deferring till? Well, how much longer do you plan to work? Let's go about it this way.
Yeah, probably till next summer. I can't take the heat no more.
Okay. Yeah, working through the winter, give you a few months. So actually,
I'm around June, maybe.
Yeah. Each month that you defer, you're getting credit for that month. Because, we always kind of talk about, well, if you defer, it grows by 8% a year. But actually, it's not on an annual basis you get that credit of waiting. Each month you defer does increase it. Now, the other balance off is you're getting incremental. This isn't like you're going to get a huge increase over deferring another 4, 5, 6 months, because then you got to balance that. How much are you giving up in those monthly payments?
Right.
So another question we get too is, how is your health, Gary?
Oh, I'm great. I could go on till probably 70 plus.
Okay, so no major health difficulties. Are you married?
No. Yeah.
Okay. Has she
46 years.
Has she retired? Congrats on that.
Yeah, she retired a few years ago. She took the early at 62 and a half.
Okay.
So I know we're going to take a hit on her.
So she's already started her Social Security benefits. Then.
Correct. And we both on our Medicare already.
Okay.
I got her on the Medicare when I turned 65.
Awesome. So you're going to have the largest check. That's already determined that, us guys typically pass on before the women. We leave the money to them, and we leave our Social Security benefit, or the largest check is left on to the survivor.
Correct.
So you've already done that. So now it's a matter of, and FRA is how Social Security looks at your benefit. From that standpoint, you're good in this 80 plus days that you mentioned. If you turn it on there, you're actually solid, because you're getting 100% of how Social Security thinks your benefit is. You're just incrementally increasing by putting it off a little bit. You can do a retro up to 6 months. You could wait 6 months after your FRA and then say, hey, I want it to be retro to my retirement, my FRA date, and they'll give you that 6 months in the form of a check there. So that's one thing you could consider.
I was mainly wondering about that increase, if it would benefit me to get it in this calendar year versus next calendar year and not get it at all. It'd just be whatever the rate is.
Yeah, here's one thing to think about in January, because they actually recycle that every year. So you technically won't get all of your credit until next January. So they will update it next January based upon last January. So there's a little bit of benefit of turning it on in January, or it's going to be adjusted in January to the credits that you didn't get calculated in on that. But once again, congratulations on that. And you are at a great point, and I applaud this and want everybody listening. FRA is where you need to strive for to get that. And if you think you're going to live into your 90s, then it's a consideration of deferring, because you got to live extra long for the deferral to 70 to make that work for you as well.
And I'm working out a deal with my company, and I'm going to probably continue to work after that 6 months, maybe 3 days a week, 2 to 3 days a week, just to have something to do and, make more money than if I go run down to Home Depot,
Yeah. Well, that's healthy financially and healthy for you as a human to always have something to do. You'll lead a better life the next 30 years.
Phased retirement. I like those.
That's it.
Thank you, Gary.
Thanks for listening to Winning at Life.
I appreciate it.
Take care.
All right, just move right on to the next one.
Yep.
Bonnie in Jackson. You're on Winning at Life with Gregory Ricks. How can we help you, Bonnie?
I wanted to speak with Gregory about what he would suggest about me moving to Houston, Texas, selling my home, and either renting or buying when I get down there.
So what is your concern on that? Because you can do either, but buying is a price. Yeah.
Well, it is a price, and with everything so expensive right now. And I retired 2 years ago. I spoke with you guys about 3 years prior, and I have my savings. I draw my Medicare. I'm trying not to, except for my first withdrawal every year. I'm not really taking a lot of money out of my savings. But I just don't know about, I haven't had a house note in years, and I don't want to go down and finance a house. I'd like to pay it off. But I was wondering about taking money out of savings, adding it to whatever I get for the sale of my home, which I think would probably be about $150,000 maybe, if I'm lucky. Because it's an older home. Moved down to Houston where I can let my girls take care of me when I get even older. I'll be 80 next year. So it'll just be, I know it's inevitable that I would have to go down there. And I don't want to go down there and go in a nursing home.
Right. Have you looked at any, for example, retirement communities over there in Houston? Because you're talking about adding more money. I think on the screen it shows that you're 80 years old, and you have to consider your health. And if you're going to buy, how long would you be in that home on your own? Because we also like to be independent as humans, and successful as you are, you'd like to be independent. But part of this is you're looking to be where your girls are to help you in later years. And then what's the transition of that home? How much excess savings do you have to make that mortgage free? Because otherwise you're probably going to borrow some money. That has to be dealt with in the future. You've got the upkeep of the home and costs of that. So I would look at both sides and try to balance that because of your age. And then you have to consider your health, and realistically, my wife's dad transitioned his business to where he doesn't travel as much. But we kind of asked him, how long are you going to do that? He said, I'm going to do it to about age 90. Okay, I see I get it from his standpoint. He said, I'm good. I can work from now on. But the reality is he cannot. And who knows? That might be a few years. It might be 8, might be 10. But I'm going to tell you, it's not to age 90 that he's going to work. And you have to determine that with your health and being realistic, knowing that at some point in the future, and it might be a decade out, Bonnie, that there is a slowdown coming and you're going to need more help. And that's part of why you're moving there. So look at what rental options are, and also retirement communities that are areas that are designed for somebody beyond is well past their retirement age. And
well, do you think it would be a waste of money, of my savings money, to pull money out of savings? Or should I just rely on thinking I would spend the money I get from the sale of my home to determine what I do with that move?
Yeah, I would use that home sale price, plus if you're wanting to buy, how does that impact savings? And that's something we can't discuss on the air, is the amount of savings you have and what income. In retirement and having a home, there's always costs. Even if you paid it off, there's insurance, taxes, and you have to factor that in. You're going to always have costs to factor in.
We are Winning at Life with Gregory Ricks.
Energy years. I'm not talking life expectancy. It's the period you have energy to work. If you're at 60, what is that energy period? Maybe 10 to 15 years. If you're 50, it's probably 20 years. But if you have some time, how can we save some money?
Gregory Ricks and Associates, 504-832-9200 or GregoryRicks.com.
With offices in Metairie, Mandeville, and Gulfport.
Investment advisory services offered through AE Wealth Management, LLC.
When I was growing up, my mom relied on old wives' tales to get rid of outdoor bugs. One method included putting 2 pennies in a bag of water and hanging them throughout the backyard. And let's not forget Mom's go-to, the citronella candle, which never worked. It's the 20s. We have science and much more thorough ways to get rid of bugs. Call Mosquito Joe. Mosquito Joe has this time-release capsule that they spray that slowly releases their mosquito death over a course of a month. Because mosquitoes suck. NewOrleans.mosquitojoe.com.
If you've got a financial situation and you're not quite sure what to do, you better call Gregory.
I started my retirement about 5 years ago, and I truly am late in life.
Would I be better to just withdraw the money out of my TSP and pay that mortgage off?
My problem is I have champagne taste in a beer salary. What is a balloon note?
Is that cutting it too close?
So will I still be eligible for Medicare?
Is there anything better I can do with the money I transferred into the Roth from my 401k? My goal is to retire at age 60. I'm 54 right now.
Hey, I have a 9-year-old son, and he's got probably $2,500 in. Is there anything we can invest it in?
And I just started a 401k a little late in life.
Then that should be like 10%.
Now, how far in advance do you recommend that someone goes to visit the Social Security office?
I won some money in a casino playing poker.
Gregory Ricks and Associates, 504-832-9200 or gregoryricks.com. Investment advisory services offered through AE Wealth Management, LLC. The Ricks Report with Gregory Ricks.
I kind of like using 3 asset classes. I like exchange-traded funds, index-linked stocks. We take those ETFs and we'll invest in stocks through the indexes on the ETFs. We'll use bonds also through exchange-traded funds. And then we like to use annuities to take risk off in the third asset class, to take the risk off, but we're still wanting to index link to get the upside of the market without downside exposure. And that blend is subject to your risk. That's kind of how I look at it. And when we look at the numbers and run historicals, that shows the higher probability of success.
Winning at Life with Gregory Ricks. Find us on the Winning at Life app or winningatlife.com. Investment advisory services offered through AE Wealth Management, LLC. Investing involves risk, including the potential loss of principal.
Hey, y'all. Woo! Winning at Life. Glad to be back with you guys. Yeah, we've had a little hiatus, and I'm going to share that with you right now. I'm your host, Gregory Ricks, and we appreciate all of our callers and the first-time caller that we had as well. And we know we're always gaining listeners and traction here, and we've been doing this show for 11 years, and we enjoy helping you with your financial decisions. And that's kind of the goal of the show, is to help improve your financial decision making by giving you ideas and stories and live callers to hear the questions that you've got, you just don't want to ask. And I get that. I've done, I do a lot of public speaking, a lot of public events, and there's cases, and I'll give you this example, that a comparison a few years ago, we do client-oriented events, and if you're not familiar, my day job is I'm founder, CEO of Gregory Ricks and Associates, a total wealth authority. We're financial advisors, money managers, and financial Sherpas. We're the guides to help you along the path, growing your money and the distribution phase also. And we were holding some client events, and I remember in particular we have another program called Women Winning at Life. So it's kind of a focused event where it's women only. And then I've had guys say, well, why can't we do guys only? I said, oh, y'all do that stuff on your own. Okay, a lot. We don't do that. We won't have a guys only, but we do the women only event. And when we would do Q&A, I'm telling you, just women will ask the questions, and you could tell even the reactions from those in the audience that aren't asking, it's beneficial to them, and so much response. Then a few months later, we do another event, and it's both women and the guy, more like the husbands, the wives, and so forth, but it's the mixed group. And we go to a Q&A, the women don't ask many questions in those events. So my point is, when the audience appreciates the calls and the questions, because a lot of people, I know there's questions out there, they just don't want to call. It's just like being in a group setting. I don't want to seem like I'm asking a dumb question. And I'm just telling you, it's not dumb questions. They're all great questions. And it's just, once again, I applaud you for listening to the show, growing your knowledge. And that's really important. I'm a big believer in reading and all. And that's why I go to GregoryRicks.com. There's a blog over there, a news blog. And we put up articles that I'm reading, of my vast reading that I do. I have them add essentially an article a day that I think is beneficial to you. So do that. We've been doing this show for 11 years, and people recently have been, over the past number of weeks, we've been running best ofs, and all of a sudden it started generating emails and calls like, what's up? What's going on? Where's Gregory? Where's James? And I'll tell you, this goes back about 6 weeks, and I'll start off with telling you we've been doing this for 11 years, and we run hard. I run the firm on a daytime basis, and we have 4 offices that we've grown into, one over in Baton Rouge, Louisiana, Mandeville, Louisiana, headquarters in Metairie, New Orleans area, and then over in Gulfport, Mississippi. And we probably have expansion coming again down the road. I don't say never, but I actually have targeted another region in Mississippi that we're probably going to add an office to. But that keeps me pretty busy. And then we do a weeknight show at 7 hour every evening and 3 hours on Saturday. So a lot of you listening have joined us in the 3rd hour of our Saturday show. So, and then we do a weeknight show. And if you want to find out more about that, GregoryRicks.com, the media tab, or go ahead and download that Winning at Life app and become a part of the Winning at Life Nation. So we run hard, and over the last 11 years, we've hardly ever taken time off. That's been a rare thing. Well, this year, because I think we've earned the right to, and we have a great content of best ofs and so forth, and we use a lot of our content to create our podcasts as well, and we have a lot of stuff over on our YouTube channel. I've started taking some time off. We'll run best of like we used to always air on Friday night. Friday night's a best of every week. That's a permanent thing going forward. And Saturdays, I'm going to take a little time off here and there. But going back about 6 weeks ago, we had I took a long weekend, didn't do a Friday or Saturday show. We ran best ofs. And then James came down with COVID. I didn't get COVID. We're like 5 feet apart, maybe 4 here.
About 4.
And we work close together, and James and I have been working together on this project for over 11 years now. I have the vaccine. I'm a proponent of it. I didn't come down with it. James did, so he was out. But we were expecting to be able to continue to do the show, even though James was down sick. But we also had something pop up, was technical problems, and we don't know what caused it, but it has to do with IP and static addresses, and we had to get an engineer involved, so it was down for another week. So we were kind of off 2 weeks because of COVID/technical problems. Then I came up on a vacation that I had planned months ago, and I went to Hawaii for a week and a half. So there we are, 3.5 weeks, 4 weeks without a show. We come back and do the show for a week, and then Hurricane Ida hits and we get preempted. And then, of course, the electrical problems, internet problems. So that kind of totals up somewhere around 5 weeks there of history of we've kind of been off the air from doing live radio. And I know everybody's kind of spoiled listening to it, but we love doing the show as well and want to. So there is concerns like, what are they gone? They're not coming back. We ultimately don't control how long we're going to be on the air, but we've been on for 11 years. So who knows? We may be on 11 more. With that said, we want to be here. We want to do shows for you, but sometimes things just, the whole occurrence of timing of things out of our control impacted us, but we still provide you great content, and we're glad to be back. James is fine. I'm fine. We're going to be doing the show. Nobody's canceled us. We're not quitting it. And if it questions laid over to, well, what about Gregory's firm? Well, I'm still involved day to day on that. And another thing is, when kind of folks talk about retirement, I have colleagues in the business because I travel a good bit as well. And, as a friend of mine, Tom, he's over in California, runs a pretty large firm over there. And he kind of asked me about retirement. And I was like, why would I retire? What is that? I have a business. It just keeps going. I'm going to go as long as my health is good, and I feel pretty darn good. So I don't see as retirement, but we have a pretty large firm and great people. I don't have to micromanage or be involved in every aspect, but I am involved in the planning and helping our advisors on plans. So my thumbprint's pretty much on everything there, but they don't need me to do their jobs also. And the other thing I think it's really important, just like the show is a team approach, our firm is a team approach as well. You're not trying to figure out, well, when's Gregory got a few minutes? I need to talk to him. And there's only one assistant. You've seen those commercials on TV. Well, at this time, we've got 18 people on payroll at the firm. And we've got a great service team, meaning you can call in and you can get some help. And we're adding on, I've got 2 new people being trained right now, and we're always on the hunt for talent. And if one of the advisors, and I've got 5 of those on the team, and if one of them gets sick, somebody else is stepping in to help and pick up that slack. So you've got to understand everything is designed as a team approach, that I can take a break and everything keeps getting handled for you. If a service person is sick, well, we've got other service people and so forth. And I think understanding that and knowing you've got that looking out for you. So if you're looking for some help from my day job, and I want you to keep listening, I want you to download the app, I want you to check out the website, connect and become a part of the Winning at Life Nation. But from a firm standpoint, if you're looking for some help, needing some questions, you don't have to become a client to get a Social Security question answered or what should I do about moving to Houston question. You can do a 15-minute phone call. We can do video meetings, or you can call to come to the office in Baton Rouge or Mandeville or Gulfport or New Orleans area. It's one number, 504-832-9200, 504-832-9200, or go to GregoryRicks.com.
I'm James Parker. Thanks for hanging out with us today. We are Winning at Life with Gregory Ricks.
Investment advisory services offered through AE Wealth Management, LLC. Winning at Life with Gregory Ricks is for informational purposes only and does not recommend the sale or purchase of any specific securities, investments, legal advice, or tax advice. Investing involves risk, including potential loss of principal. Raw conversion is a taxable event and may have several tax-related consequences. Be sure to consult with a qualified tax advisor before making any decisions regarding your IRA. The information and opinions contained herein are provided by third parties and have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed. Neither AE Wealth Management nor advisors providing investment advisory services through AE Wealth Management recommend or facilitate the buying or selling of cryptocurrencies. The firm is not affiliated with the U.S. government or any governmental agency. The firm offers insurance services. We are Winning at Life with Gregory Ricks.
WRNO FM, New Orleans, an iHeart radio station. Available everywhere on our free iHeart radio app. #1 for music, radio, and podcasts, all in one.